Headphones a must, I think, guys.
Yeah.
I'm just connecting to my headphones now, and then I'll be good there.
Hey, Darren.
Good morning, Adira.
Mute your live stream tabs
Good morning,
and you won't have an echo.
I will mute nothing.
Should I mute Ram?
You can mute yourself.
Okay. Mute yourself, fool.
Sharif in his house.
Yeah, I'm gonna mute too.
Sharif is on the stream right now.
Exactly.
Hey, guys.
And that
How are
silly,
you?
ugly
Good
Cowboys
morning.
hat. Good morning.
How is everyone?
Me, I'm in a great mood.
Likewise.
I got my Buffalo Bills, Josh Allen going on. The market's not down, so I'm pretty happy with it.
It's not down yet. There's still
What do you
time.
mean yet? Okay.
I mean,
there
we're
is still
trying
time.
hard right now.
Oh.
All right, a few people a little bit confused. Let's do a little bit of a rundown here as far as what's happening. Good morning, first of all, everybody. If you missed it, going back a couple of days, we've been talking about it all week long. There's construction happening in the studio, so we don't have destruction. Maybe we should throw those pictures up at some point, Randy, and show the lab that is our studio currently.
Yeah,
so,
we can share. Absolutely.
It's a weekend project. We're all fingers crossed. Everyone hoping that it's going to be wrapped up in time for Monday's live stream, so everything will be back to normal on Monday. This is going to be Q&A style, conversational, very casual, as you can see. Everyone just hanging out right now. We'll have a few guests pop in throughout the morning and as we head towards 1 o'clock this afternoon. So it's Q&A. Bears versus Bulls going to pick out some questions out of the chat. Anybody has any questions, throw them in the chat. We'll answer them as we go. Neil, what were you looking at?
Well, I mean, what I'm looking at right now is the ridiculous cap that Sharif has on. So, in all seriousness, I know it's Thanksgiving. So first of all, happy Thanksgiving to everybody out there. I hope you had all the turkey or hopefully something a little bit better and a lot of pumpkin pie. Maybe you enjoyed watching a little bit of football. I know I did, although I would have been happier if the Dallas Cowboys had lost. You guys can all understand that. No, but really, it was a great day. I was telling Brendan that one of the big Black Friday deliveries that I need to get didn't come in because we got a new TV, but we needed a new TV stand or like table for it to temporarily set it up. Old one's not big enough. It's supposed to come the same day. They didn't come. So I got like a big old TV box sitting in my living room, and my daughter wants it opened up. So that's the only thing that has me glum right now. And I'm real happy that ASML is up. Good news for them.
Yeah, why is that? That disappointed me, Neil, because I've been, I worked my way, like I'm very early in my position building in this name. You've been in it for a lot longer. So I was looking, I thought it was basically in a consolidation zone. I thought we were in that accumulation phase. We draw big, that 650, 700. We've been working in that range. Now it looks like it's starting to put at higher lows. I don't know how you feel about this, but I'm starting to see kind of maybe the 21st as that bottom. Since that time, it's been some higher lows. We're working our way. Looks like we're still in that accumulation phase, but I want to pick up some at 650, maybe a little bit below that as well. It's holding there. Now, the thing is, too, we saw why the sell-off happened, right? We heard that it wasn't anything to do with AI, that it was specific to the PC market. We got more information on that weak PC market from Dell, from HP reporting earnings last week. They did well in AI, but their PC market also not picking up. So that's why ASML sold off. But at some point, we're going to have that upgrade cycle come to fruition. So I'm building my position here. I don't know how you feel about this.
Well, your time is good. I ultimately like the real reason, it's the risk in China that's such a big deal. And if any of the import restrictions are going to be eased, in terms of how strict they might be, that can only be good for ASML. They got absolutely beaten up. You look at that chart; it's going to look just as bad as. I mean, I shouldn't say just as bad as Intel, but it's going to look just as bad as any other semi-related name. So I think this is good for ASML. I think this is going to be good for the AMATs of the world. It was interesting on Tuesday night. I was at a dinner, and one of our good friends in high school, Sean and myself. Let's just say he's pretty well connected in the semiconductor industry, and I know he actually has been a believer that some of the, like the NVIDIAs of the world, the hyperscalers can't continue, that there's going to be some kind of a pullback. They can't keep their growth up. And then you look at
Right.
what could be the next things that go. And you start to think about, okay, well, the suppliers, some of them, they make the machines that make the chips, they could be a good place. I like the power play. So as money shifts, it doesn't have to shift away from semis into like a whole nother world. Like it doesn't have to go from that to small caps. It doesn't have to go from that to retail. I mean, some of that money does, but I think some of it can bleed in to places like ASML. TSM's already pretty good, but I think ASML is going to be able to
Neil,
benefit from that.
we should probably talk about SMCI. SMCI is dumping aggressively.
Oh,
right
no,
now.
Not again.
Yeah, something is going on here, Neil. It's dipping from 35. We're dropping below 30 right now into 29. I'm looking at anything coming in my blotter. I don't know if you guys are seeing anything. I'm not seeing any new information right now, but that was a big dump with volume. Each 1 minute candle has about 250, 300,000 shares per pump. So there is volume coming in the pre-market. About 2.5 million shares traded so far right now, guys. Not seeing anything still on SM. Yeah, I don't know if you have anything there, Neil.
I don't see anything. I just went to I just hopped on TweetDeck. I haven't my Benzing up. I'm not hearing a word just yet. One thing to keep in mind though, you get more black swans on a day like today, right? Now obviously you're going to have a little bit less liquidity. So anything hits the wire or anything has a skittish bid, and you will see things like that. But I'm still not hearing anything. I don't know if anybody else can see. Yeah, it looks like that's nasty.
Yeah.
Yeah, I'm not hearing anything. So we could be waiting for a news story, or it could just be one of those, it's a half day, there's less people on desks, there's less people on the bids. That's going to be doubly true at the open.
Yeah.
There'll be less than what you're expecting. You just got to be careful with this one because remember, technicals aren't going to matter as much with SMCI. Like I can sit here and wax poetic and tell you that you're supposed to have local support if this thing gets down to like $28, $29. Like it's. But
Katina, man, anything on your end there? SMCI is dumping hard.
But we're not here for the markets, man. We're not here for the markets, No, I was looking. I didn't see anything on. I just got my audio working out there. I didn't say anything on SMCI either, but Neil has a good point. I didn't log into the Benzinga platform here or anything, so I think I got to get a news source up and running.
I'm still not seeing
as we go.
No, man.
How's everybody doing?
Feeling like I should have worn my Bills jersey. That's all I'm feeling.
Yeah, I have to go find a hat.
Guys, a few questions coming in already. I'll throw them out there for anybody who wants to take that on. Just, I'm keeping my eye out for anything on SMCI. There's nothing that I can see yet. From Diaz29, how you guys can survive the ups and downs of trading?
Yeah.
How can you guys survive the ups and downs of trading? Maybe trading psychology angle there.
Oh, that's a great question. So I think one of the most important things for the ups and downs is you've got to first find where your ups are going to be. So if you have to, when you go live and when you're developing a trading strategy, you have to find something that works in the first place. And once you have something that works for you, you focus there because then you can build on that, scale that, and then as you're trying other strategies out, when you do have the downs, you kind of go back to the basics, which is, hey, what are the best strategies for me? Are those still working? I need to refine that, which is my core, and then work from that standpoint. Like if you have 5 or 6 different things or ways of trading you like, I like small cap runners, I like big caps, whatever it might be. If you're trying to fix them all when you're in a slump, you're going to be in trouble. But if one of them is your bread and butter, focus more on that in that short run.
Katina, man, any thoughts? He's not there.
He ran to get a hat.
There he is. Back in the building. Sean.
Yes. I'm trying to load up the chat. I'm trying to load up the chat here on the other thing. No, I mean, I think Neil answered that. I think that's right. I mean, you want to be able to ramp things up when things are going good and slow things down when they're not going so well. And different strategies will work at different times. of day even, let alone how when you come in, the market is rapidly changing. Just like right now, we're having, this move down. You're down almost 1% here in the NASDAQ, and market's trying to fall. So you got to maybe adjust. And sometimes I get caught with that. I come in thinking it's going to be a long, and the next thing you know, bang, market just flushes down on you. So you have to have that ability to sort of flip up, your opinion, and that can happen, mentally, physically, psychologically, everything, one day to the next. You never know what you're going to be experiencing. There it is. Super Micro down 8% right now.
Yuck.
But it's working its way back. It's coming off the lows.
How low did it go?
It glanced at that 29, Katina, man. It's doing that kind of V-shaped recovery. I'm still not seeing anything on this whatsoever. And I'm looking at Twitter as well. And nobody's really seeing anything at all. And I'm looking at multiple platforms. Anybody in the chat, if you guys see anything as well, I'd love you if you would tag me. Tisha Perkins says VCIG. I haven't had an opportunity to look at these small cap gappers on the day. I know Tisha trading those small cap gappers all the time. VCIG, what do we got in that one? Okay, this is a big one here, 34%. We're talking about definitely small cap gapper, 22 million shares, $22 million market cap, 5 1/3. Let's see if there's a headline. This one also is headlineless. So what do we got here? VCI, Global Limited, Malaysia-based diversified holdings company, cybersecurity, gamification, great breakout, bull flag continuation off that 3.5 quick touch, consolidates in between 4 1/4 and 4 3/4, and then you get the big boy break through that $5, and now we're kind of dancing, doing a bull flag continuation like this one, Tisha. This is a good one, and these ones are going to run in the pre. That's the thing. The majority of these ones are going to run in the pre-market. And the majority of them are going to do their volume in the pre-market. And if we're trading them after the bell, usually we're taking them off support. So VCIG, good luck right now, Tisha.
But I think I see that. I see that SMCI there does make that bounce off of $30 there. If you sort of zoom back out, I know we're not really sharing our screens here, but if you guys want to look at the same kind of chart, so just using TradingView or whatever you guys are using there. You zoom that back out there. I wonder if $30 is going to be, a marker that we can look at for Super Micro there. It goes all the way back, back to the beginning of the year where we tried to hold that $33, $34 mark back in January.
Katina, man.
Back.
Dara is saying that there's speculation of SMCI delistings, but no confirmation or citation. Just want to throw that out there.
I'm only seeing like randos on Twitter saying that.
Guys, there's a few people just suggesting that on Twitter. There's nothing exclusive on that.
I feel like we'd be in the low 20s if that was the case.
Yeah,
I think, true. But I mean, you never really know.
Hey, Sean.
Yeah, I mean,
Sean, turn your TV down in the back a little bit. It's a little distracting.
Turn it off. Get that out of here.
There we go.
Was watching. Yeah, there we go. Good. Thanks, Brenda.
What'd you have on there?
I have Bloomberg surveillance, actually.
Oh.
He's watching highlights of yesterday's shellacking.
That's what I thought you might be doing.
Here's Belle. Say hi, Belle.
Hey.
Yeah, Belle. She doesn't even know where to look. She's a cockapoo.
What is going on?
Here she goes. Yeah, she's a Packers fan there yesterday. Hi, Belle. Hi, Belle. Oh, how are you? You like SMCI? All right,
no.
Go away there. So what else are we talking about here? We had I was trying to look at Palantir this morning because I still think it's going to be a good trade since we're still holding that $60 mark, and you actually made that move down a little bit into $65 there for PLTR. That was going to be another look for me today. I mean, I'm always looking over there, but at the end of the day, you had a nice little hold back on Wednesday in that 65 range. It's held in the pre-market, the bottom there for PLTR. So that would just be something that you may want to look at. Obviously down 1% here, down more than the market, but it has a tendency to rally back. So that would be a name that I'd be looking at here early as well. And if anybody has any questions or anything, please throw them into the chat. And
we got more, Sean. We got more. Here comes Diaz 29. asking for one stock pick. Maybe everybody can throw in one stock pick to hold for the next 4 years. Very specific.
Rivian.
I knew you were going to say that, Randy.
Well, hey, come on. We've got a lot of upside. And I you know how bullish I am on this stock. We have federal investment. We have private Volkswagen investment. We have state level investment. So I think there's a lot of interest in trying to save the American car industry. And that's a tough choice. But there's fear here. And they got to do something about it. The big three, I think, are really at some point going to have to get their game together. The Chinese manufacturers like BYD are really making inroads into the markets. And at some point, you know, the cost of building a car is going to be a huge issue. So if you're going to hold a stock long term, you're looking for upside. You're looking for not just the daily bounces and the ripples, but you're looking for that positive influence. And if you got investment from, you know, the federal government and from, you know, state level and other struggling automakers like Volkswagen, you know, there's a problem here. So they have to tackle this as a group, as a team. Go ahead, Sharif.
Okay, so RJ Scaring, he's getting some money. He's getting $6.5 billion, close to $7 billion. That's good money. That's but my opinion is it's going to be a one-off thing. We've seen Joe Biden kind of want to accelerate his agenda as he's leaving. He's done a little bit of that with Ukraine. He's doing it with his green energy plan. Do you think they get the same type of love, Randy, under the new admin?
I don't know. We know the new administration is not anti-EV, but maybe less affectionate about the whole thing. Oil and gas, obviously, is a different story. You're talking about tens of thousands, if not hundreds of thousands of American jobs at risk here if the auto industry starts to fold up. And that's just, you know, it can't happen. The unions will be in a dire straits. So there's a lot at stake here. This also has a lot to do with the USMCA agreement, which is going to probably be, you know, renegotiated. He's talking tariffs on everything from Mexico and Canada. Yeah. So, but there's a lot of upset here. There's a lot of downside to not just the auto industry, but to you know, exporters in general, auto parts, electronics, things that are made in the tri-party agreement collectively. So you don't want to upset that. You don't want to have, they're talking oil and gas, you know, tariffs. We export a ton of oil out of Canada into the U.S. Gas prices will go up. You know, U.S. consumers don't want that. You want to build U.S. Consumer confidence in any way you can. So to upset that in any fashion, I think is a negative push. But I like the upside to Rivian and this investment we've seen in the last 6 months at various, again, government and private levels, I think is a positive note. So to whoever asked that question, that would be my pick.
Yeah.
All right, guys, we got a super chat here. I'm going to jump to this. Angelique, thank you very much. $6.99 super chat. If you could choose to invest in 5 stocks now, which would they be?
Meta's one of them, because I feel like out of the Mag 7, if I had to pick one of the Mag 7 names I feel like I'm okay with, I think they're gonna win when it comes to hardware. All you have to do is look at the price point. Man, like that new reality headset is amazing. And I think it's a kind of device that I can see being in almost every single household. When like a 70-something-year-old like my dad is pretty much all over and saying this is going to be the future, kids are going to love it. I think the same way that Apple was able to transform themselves in a certain extent with the iPhone. Maybe it's not as big as that, but I feel much more comfortable. I think you do want to have some Mag 7 in there. So you know, Meta's easily the one for me out of that group. I will, to answer the question before, I was actually going to say SoFi, because I just think with the new administration, and I think it's going to loosen things up for just in general in financial sector and for fintech, I think that's a good space to be in the next 4 years. Throw on top of that, hey, you're adjacent to Bitcoin and any of the crypto craze, you're going to catch some of those headwinds. But I like those 2 names, but I'm sure we'll hear. I have a funny feeling who my man's going to say.
No, I'm not. You know what I was actually going to go with? I was going to go with something a little different because I know a lot of people are looking at tech right now. I was going to actually say Walmart. I actually think that there's a there's been a good switch here from, what people are looking for in the retail space. And I just think that, Walmart's really produced over the last little while. It's had a huge run this year. I think it continues. I just think that in order to diversify sort of everybody's portfolio a little bit, if you're talking about 5 stocks that I'd like to own, I think in the retail space, I think there's Amazon, which I would own over Walmart, but just as a pure retail play. And the thing about Walmart is, it's kind of funny, is I think Walmart is really underutilizing its online. I mean, at least here in Canada, like I don't really hear anybody talking about ordering anything off Walmart. And I just think that if that can get going a little bit more, I think that could be a huge, huge opportunity as well moving forward. I just don't see them, putting up any bad quarters, especially in this current environment. So I'm going to throw Walmart into the bucket there to go with some SoFi, some Rivian, some Meta. I really like Meta too. I mean, I think Meta, the advertising business, is absolutely monstrous. I mean, everybody is on Instagram. TikTok is still huge, but I think a lot of reels and that's going to filter through. I think you could dip by Google at some of these levels as well. I mean, with this DOJ and some of the troubles there with Google, I think there's some good opportunities there. But I think you could also buy indexes, right? I think those are good. I would always take the NASDAQ 100 as a top 5 choice as well.
I want to say a couple of good ones too. I'm going to say one I talked about earlier, ASML. I think it's been so beat down that this is a fantastic opportunity to build up your position and basically what is a monopoly. So, some grumblings of maybe the Chinese developing ultra lithography machines. I'll believe it when I see it. And even when they do, are they going to be as good or reliable? So ASML to me, definitely one you want to pick up at this price. A controversial one, I'm going to go ahead and say IBIT, even though it's been so, it's at all-time highs or thereabouts. I think we continue to run on Bitcoin because of Donald Trump and the policies that they're going to put in place. I think we're probably going to accumulate in and around 100,000 or below it, be 90, dance in that 90 area, and then we'll get that continuation, I think. So IBIT, definitely one I'm looking at. And then here's like a one that I really want to throw out there, a company that you can possibly get exposure into SpaceX. Now, some companies, they buy SpaceX in the secondary market, they hold it in their portfolio, and then they basically trade as a private. If you can find one that you like that doesn't have exposure to a market you don't like, then I think anything SpaceX related. And today I'm hearing them, they're raising more money apparently, because they want to expand some of the stuff that they're building, mostly Starlink stuff. So they're expanding more money. New valuations about $250 billion. So that's probably just going to keep accelerating as Starlink continues to grow. So I'm long anything specific to that. If you can find a proxy to invest in SpaceX, I like that one too.
Sharif, there is Kathy Woods has one. The ARK Venture holds like, I don't know, it's between like, it's around 9 or 10% SpaceX. It's actually, so you got to check it up. It's the ARK Venture Fund if you want to be into it. It's got some Tesla in there as well. So it's one of those ones, if you want exposure to SpaceX, I'm much more familiar with that than that DXYZ nonsense.
Right.
I'd stay away from that one. But in true sense, I love that one. There's a lot of good options in the chat people are mentioning in there. I just wanted to throw in, because when someone said ASML, or when you said ASML, someone was throwing in there AMAT. And there's a lot. That's another really good value. But yeah, some good picks. I want to hear from Joe. First of all, what up, Joe? That's
Where's
a good
he at,
man?
man?
That's what I'm feeling. I'm feeling that right there.
Yes, sir. You know what? I was thinking, so we had a couple of tech sector spots. We were a little defensive on this one. I'm going to go with JP Morgan. I really like Jamie Dimon. The stock is a little bit, maybe, I wouldn't say overbought, but it is pricey at this moment. But I think if you're going to go from the bank sector, you got to go with the top bank, and that is Jamie Dimon and JP Morgan. So that would be one of my top 5 picks. Sean stole my Walmart, actually, so I was going to choose Walmart. But then I said, so I have to come with another good one. And I think JPM offering a good dividend as well, too.
What do you think, Brendo?
I was just working on, sorry guys, I was just working on getting some pictures here. I know a lot of people are still asking questions about the studio. I'm gonna grab some of these pictures courtesy of Randy of what's going on in the actual studio right now, because it looks like a laboratory, as Randy was saying, and then we'll let everybody have a look here. Just give me 2 seconds.
It's not a
I was
laboratory.
gonna. I was.
We're cooking meth, baby.
Is that what we're doing? I was gonna ask. Let's post some of those pictures up because they're pretty wild in there. I just fingers crossed that we can get back up and running there for Monday. It looks like a pretty extravagant situation.
We're gonna try. We're gonna do our best.
It'll be long
how's it
hours
been going,
on Sunday.
Randy? Any updates on that, Randy?
No, not yet. They're still in I call it destruction mode, but no, I think they're putting things back together. We should be ready to go hopefully by tomorrow, and then we can get in there Sunday, between tomorrow and Sunday, put everything back together, do a whole bunch of testing and do some cleanup, and then there we go. So this is basically
that's essentially the news desk.
Yeah.
That's where Jared's usually sitting.
Oh,
that's
goodness.
crazy right now.
Okay.
Yeah, on the
So
left,
just
the trading stations. That's a mess.
Yeah.
They've
So more.
covered everything up just to reduce the dust infiltration, so we don't have dust on our cameras and our audio equipment and all our expensive production stuff. So we can bring you a nice clean show on Monday. So this is all part of the plan, but we have to undo this plan to get us back on the air, which we will.
What's the worst that could happen? We're always on there. We're here right now, baby. Randy? Yeah.
What's that?
Are you in the kitchen area? Where
I'm in my kitchen. Clyde and I are having a morning coffee.
Oh, you're at home.
I'm at home.
Oh, I thought you were maybe at the office.
No,
there's another look, guys. There's that's the actual floor right now.
That's the lab shot.
Yeah, that's crazy.
Wow.
So
they did a really good job. Like I have to say, they did a really good job of covering everything.
Yeah, it's very comprehensive.
That stuff.
A lot of plastic.
Oh, wow. Yeah, no asbestos. No, it'll be okay.
I hope not.
So for anyone asking, that's why we're not live today from the studio as we normally would be. So thanks for hanging out. Thanks for watching with us this morning. We'll throw along some market info as we get it. And as we said to start things off, if you missed it, any questions you have, throw them in the chat. Bears versus Bulls going to pull those out, and we'll get as many questions answered as we possibly can. We have a ton, guys, to get through, so stand by here. I'll throw you another one in 2 seconds. All right, Mike Breeze, you're next. What advice can you give someone in a trading slump?
I mean, so it's weird because that's similar to the other question that we got, and I think, first of all, you have to define if you're in a slump. That means that you've had some ups and downs, right? So, if you're a beginning trader that has never actually, like, you've never been paid out, you've never had some positive returns, then that's a completely different story. An established trader who has had profitability, who is in a slump, first you have to identify a couple of things. Has something changed? And this is not an easy. Has something changed within your trading strategy, in your personal execution of it? Like, are you executing your plan, or something happened in the market that is changing the things that you trade, right? So, like, an example would be during the meme craze. If you're a small cap trader, the risk reward and all the technical, all that stuff was way different during 2020 in that era. So you had to be able to adjust with it. Is something it's the market related, or is it something the way that those stocks that you trade are trading, or is it that you are not executing your plan? And that's where it comes to actually having a trading strategy and a plan. Because if it's you, and hey, I'm getting stopped out of NVIDIA, I'm not following my planning, being patient for my entries, that's very different from NVIDIA's not trading the way that it was 12 months ago. And that's not an easy question to answer for yourself, but you've got to be able to answer it, because oftentimes, traders will sit there blaming the market for something that is them not following their own trading plan.
Yeah,
Joe,
I totally. Yeah, absolutely. I totally agree with what Neil has to say there. Just one thing, again, you need to know kind of your system structure, and then you need to be able to identify if you're stepping outside of that structure. And patience is a really, really good point that Neil pointed out, is because if you need to step back a little bit, and then you need to just focus and be more patient. Maybe not take as many more trades, wait for those A+ setups to come in, and then have the ability to realize, hey, I'm trading outside of the structure. I'm trading outside of the system. Let me tone it back. Maybe I'm taking 5 trades a day. Well, maybe step it back to 2 trades a day or something along those lines, something where you know that you have a complete data set and know where you can become consistent and just try to get back to that. So just take a couple steps back, relax, and don't trade as much. And then eventually you'll get back on the winning end of things, I think there.
Nice. Okay. More questions. Hold on one sec. I'll grab another one here for us. Oh, this is for Neil specifically. What's the best way to learn to plot charts to predict trends?
First of all, I don't know if there's one answer for something like that. I mean, you have to find your own comfort zone. The best way to plot charts to predict trends, like you have to, what's the trend that you're looking for? If you're looking for a long-term trend, then you want to make sure if you're a swing trader, you're using monthly charts. Always higher. The best thing, it's the most simple example, higher time frames than what you're essentially going to be trading on. If you're holding for weeks, you got to look at daily charts and monthly charts. You know, if you're a day trader and you want to identify trends for multiple days to have a bias, then you want to be looking at something longer, like 15, a 30-minute, a 60-minute, that kind of a nature. And then if you're like really short-term scalp trading, you know, if I'm going to be taking a scalp trade last a few minutes, then I'm looking at a 3 or a 5-minute chart to see a trend reversal. So like it really depends on what you're looking for, and then you have to refine the strategy. Like you can't just sit there thinking there's only one way to do it.
And I don't personally do this, but a lot of people, they track their data. They're like successful traders. They'll have their data. They'll know exactly what percentage, they're right or wrong, and etc. So what my understanding was that your losses tend to bunch every certain amount of cycles. So if you were distributing losses, say over 50 trades, that they were evenly distributed, say every 10, and there's whatever. When you like go through so many of those cycles, they tend to bunch together. So then that has like an effect on your psychology. Like, okay, so my trading plan is no longer valid. When what's actually happening is you're getting bunching of your losses. So from a statistical perspective as well, there's that. But then obviously that presupposes that you're tracking all your data and you're doing all that kind of stuff. Not everybody does that.
That's a great point. I think the main key to focus on is what is working for you from a mental standpoint. What can you put your confidence behind and have the ability to do on a daily basis? Sean, any thoughts?
I think we're all on the same page as far as learning how to chart, learning how to build the platform. Sharif, I like that little background you got going on there with the.
That's an app.
That's why I was laughing.
Just click the bottom right, and then there's the app section. So if you just touch your screen, there's a little app section there. Go into that, and then you've got the virtual backgrounds. You can search. So all I searched was stock market, and then it threw up this one.
That's sick. There's something called AI Companion here that you.
I know that takes notes, brother.
Takes notes. Can I get muscles like you? If I tell the AI,
this guy's got a troll. This guy's
here for me like that. Oh, I do want to give a shout out to Randy.
My own home, bro.
Randy, look what I got, boys and girls. Here we got the banana in the house. So you got to make sure that you have the same routine.
Get your bananas.
Routine, you know what I mean?
Way to go. I was going to bring you one, but
and Randy, I got my own coffee today as well. So that's cheers to everybody that's out there doing.
Good on you.
But as far as charting, I think you want to find the right software. You want to find the right piece of information that you're looking at, and time frame is very, very key. Just go with it and get comfortable with what you're doing, and make sure that you're using something consistently. That's all. Don't just flip flop from place to place to place. That's my advice. Like stay with something, get something that works for you, and then start to dig down a little bit deeper. That's why we always talk about VWAP and things like that. So keep it simple, stupid sometimes, as they say.
Adara,
I want to bring Adara in.
Yeah,
Adara's here.
Yeah,
Adara's been learning and gaining more confidence in trades that she's been taking. Any thoughts, Adara?
Yeah, I think for sure, especially I want to speak on maybe like the slump question and the charting as well. So my answer is probably going to encompass both. Thanks for letting me jump in here. I think one thing I've really found with taking, I guess, trades that have been stronger with the process and then more profitable as a result. I think it's just finding a setup that works for you. Like I've really only been looking to trade spready stocks that are more expensive because I know that's where I have a bit more of an edge. And I only take trades that are like screaming at me to take them because it's an A+ setup, whether that's through something I'm seeing in the tape, that's whether that's through the chart, whether it's through a combination of all of those factors. And then that's where I found I've I guess kind of avoided slumping as of right now so far since I started doing that because I found a strategy that worked for me. So I guess that's my take on that. And with charting, I think too, you realize what's important and what's not. Just kind of try different things, try different time frames, see if there's any confluence, for lack of a better term, there between the different time frames and levels you're seeing. And I think that has combination of that has really helped me. So that would be my response to that. I hope everyone had a great Thanksgiving and thank you for joining us here today.
Yeah, absolutely. Happy Thanksgiving to all. Hope you are very, very full and in a turkey coma this morning. P Lucid with the next question here. Hold on, I just lost it. There we go. How significant do you think gaps are in stocks that are currently hot? Would you wait for these gaps to fill before jumping in, or would you start with a small position and add more as the gaps fill?
It depends on your time frame. If you're talking about like longer term and trying to the example I'll use maybe like an SMR. Like if you believe like the nuclear play and any whatever, like that's going to be huge and you want to get in for the long term, well then there was one gap it made from like 13 to 18 where it was still early in the move. And in a situation like that, where I'm holding for a very long period of time, I'm not waiting for it to fill back into the gap. Now, if you're talking about a swing trade and it's already doubled up, which that went 13 to like $30, then I might let it pull back a gap. That would make a little bit of sense. Bitcoin could be an example of that when we had the breakaway from that recent channel around like 70,000 or so. You could be waiting for some kind of a pullback off 100,000 because you didn't want to buy 100,000. But I think waiting for it to fill the entirety of a gap back when you want to hold this thing for a longer period of time doesn't usually make sense. Sometimes you just got to be willing to bite the bullet, get in a little bit earlier because your time horizon is long. If you're talking about day trades, we say this all the time. Once you lose support, I tend to want to be very, very patient on a day trade. Maybe let it try and fill in the gap. That's a bit of a different story. That camera follow that Randy's got going on is way too cool. See, that's why Apple wins, man.
Hey, go Apple, go. Joseph, what's going on?
Yeah, I was gonna say this is something definitely that I would love to touch on as well too. So it depends exactly what Neil was saying. It depends on your time horizon. Okay, and also really depends on which side the gap is going to be filled. Is it a downside gap? Or is it a topside gap? So did the stock gap down and then you're looking to fill it to the top side, or did it gap up and you're looking to fill it to the downside? So those are two different setups in my books and what I have data set collected for. Now, doing gap fills to the top side. So for an example, like a stock like Amazon, after that Black Monday or whatever we would like to call it, the stock gapped down like the rest of the market. Now, this is going to be something that I'm going to look to play. Why? Because yes, it's Amazon, but also the broader market gap down as well too. So you're looking to fill this gap, even though it may be a little bit larger. So you do need to have a little bit longer of a time horizon. Now, I don't necessarily like to play gaps where the stock gaps up, and then you have to short the asset to fill the gap to the downside. I like topside gap fills, and sometimes I do enter at the breach. And I like how you pointed in the question is, do you get in at the breach of the gap and then wait for it to continue to fill it and add more? My answer to that question is yes. And I did exactly that. So I have a position going where it's like, okay, we entered the gap, it pulls back a little bit, and now you re-reach the gap. I'm going to add to that position. So that is something that I would look to. So again, just keep in mind a topside gap and a downside gap, in my opinion, from what I collected in my data, is that I like it when a stock gaps down, and then I can take that underlying asset long, because with strong stocks like Google, Meta, Amazon, the broader market, the Qs and the SPY, those gaps will tend to fill. So that's something that I like, and I like how you phrase it: is do you add when it enters the gap again, and then the trade starts to work? And the answer to that is absolutely. So yeah, I like gap fill.
Katina, man, you want to introduce us to the friend there?
Oh, this is Belle. This is Belle. So Belle was kind of sleeping here, but I just wanted to bring her on. She's just watching. She's watching TV. She's watching YouTube with me, right here. So you want to say hi, Belle? Belle's a. Oh, there's a yawn from Belle right there. Yeah, so she's just chilling out with us, watching the stream and getting those questions ready. I was gonna say on the breakouts there, on some of those island gaps, what you're looking to do is make sure that volume holds, right? So you want to make sure that in the next couple of days, when a stock starts to gap up, that you do have a good little volume spot there where you continue to see volume come into the name. You don't want it to completely dry out, because then you're going to notice there's going to be a loss of interest in the name, and you could just fade back down. So to me, it's like we had that question about when Palantir gapped over to $50, went to 53, and tried to hold that gap back in. I mean, those are the sort of the support resistance areas that you're looking for. So for me, as long as you're trying to hold those gap areas and you like the story behind the stock, I think it's worth taking it, because it can also trigger short squeezes, because a lot of traders will be waiting for that gap to fill back in. When it doesn't, you get another good story, then you get another pop back to the upside. So generally speaking, I think you want to keep playing those gaps. Roku had one. A couple different stocks had a couple different moves in them. So I like those plays, and I think they're the start of something good. So I actually wait and look for some of those. And we had Obi on the last couple of days trading some of those names, Rocket Lab and things like that are breaking out through highs, and there's not really any Mag 7 names that are doing that right now, but some of the stocks that have just pushed through new highs. You really see what happens when those start to go. So yeah, I would say stay with that story, especially if they start gapping higher with volume.
I want to chime in on a little bit as well on this too, Katina, man. I want to talk about, first of all, identifying what kind of gap we're seeing. So for the majority of the stocks right now, they're not really breaking out. Most of them have already broken out. So what kind of gap are we talking about? Well, there is one called a continuation gap, and basically it's exactly what it sounds like. It's continuing the big boy move. And so what I don't know how you guys feel, but I don't really want to see these get filled, especially the big breakout gaps. Now, if we're talking about, a small percentage gap, then okay, I get that. It's a common gap. It gets filled. Maybe we continue on our merry way. Maybe we consolidate for a little bit. But for the trending stocks, like what we've been talking about with some of these nuclear names, for whatever reason now, quantum
computing, SMR.
Yes, and quantum
qubit
names are breaking out. And so I personally don't know if I want to see these get filled. I want these continuation gaps to continue. So I don't know how you guys feel about that.
No, I 100% agree with that, especially with the quantum names, the things like the SMRs of the world. Once they start to get steam, because the the other part of it, not to be fundamental with it, but when you are talking about something which is in the first, second, or third inning, those are exactly like those are the gaps you don't want filling right away. Like, you want there to be some continuation. It's okay for them to be slight pullbacks. Now, I think as you get in later on with some healthy 10-15% corrections, but yeah, you definitely want those ones to hold that initial gap. I mean, I would make the argument that things like that QUBT, it's actually a horrible sign if early on you were to fill in the gap. Sometimes we'll say, if that dip buy comes in, I may not want it. I feel like that's the case with some of those. Like, yeah, sure, it's the price that you might have liked, but the fact that it's back there, maybe you don't want it anymore.
Eddie R with the best comment so far. Are we on lockdown again? No, we're not. We're not on lockdown again. There's construction going on in our studio, so we've been relegated to our home setups for today. So thanks for jumping on. More questions to come, guys. To anyone here, when trading TQs, why not also trade SOX L, as they seem to have similar chart movements?
Well, I mean, Yeah, but they're just completely different. That's I mean, that would be the reason why. I mean, SOXL would of course be the chip's name, and then the TQs is the Nasdaq 100, right? So you can see even a day like last, I don't even know what day it is. So I guess Wednesday, when we had Nvidia down and we had SOXL, we had SMH was down, 1.5%, 2%. Nvidia was heading to the downside. The Nasdaq was only down maybe half of that. So sometimes the relationship is not as strong as you may think. So I would say, trade specific catalysts, like on a day like today, where it looks like a lot of the chip names are going to be actually outperforming the market early on here. I know we're going to talk about SMCI, but as the market opens up, we're going to see hopefully some chip names outperforming the market. So you may want to figure out looking for longs in SOXL if you were looking to go long on something, and then maybe short on the Nasdaq if you saw an inverse relationship on a day like today. But yeah, no, I would say don't get too caught up trading indexes against each other, because there's quite the differences there, especially S&P 500, right? Remember, the Nasdaq is not going to include any financials, or any energy names. So the S&P sometimes will be down 1%, Nasdaq could be up 1%, just a matter of the components. So try to stay away from indexing and sort of hedging yourself against each other. That's my opinion.
That's a great. I mean, there's not much to add to that. I think it's there might be the odd time where you might, if you're a Qs trader, you might choose, hey, today it might be better because I like trading indexes to do something with the stocks, just because that's the space that's going. Like maybe there's a big gigantic headline, like a China headline, and they're going to be under pressure that day. And instead of shorting the Qs, you just feel like you're going to get more bang for your buck out of stock sell. But that's the only time that I would consider like one over the other in a situation like that. But and for anyone out there, like speaking of SMCI, I have to admit, like sometimes we talk about this when there's a big hefty move without there being news. Once it becomes pretty clear, hey, a headline didn't actually drop, it's a pretty decent bounce there on SMCI. And I'm not saying you sit there on the bid, but from a trading standpoint, anytime you're scanning services and you can't find anything, like at this point, it's been a couple of minutes. There is nothing going on here. Sometimes that can be a bit of an actionable trade. It's even better if it turns out to be that the news is completely bunk, as we had it the other day with Adara. I think that was always good. But yeah, SMCI making a decent bounce in here. Just be careful though, because I want to remind everybody: holiday shortened day, less liquidity in the markets. At 9:30, there is not going to be the same bid, the same offer that you're used to. That can make it really good for catching quick early moves, quick early breakouts. But if something like breaks through a support level, I like this long in front of X. Well, you really don't want to be fighting it on a day like today. Like you get it right, you hold it quickly because it can really work in the open. But this is the kind of day where you don't want to be fighting an early move because there might not be as much liquidity as you're used to, and the slippage will be bigger, and it's just a lot more pain if you get caught the wrong way off the open.
All right, good stuff. Let's get some more. Speaking of Adara, let's bring her back in here. We had a question specifically for Adara. Adara, you mentioned spready, quote unquote, spready stocks earlier. How do you find edge in trading spready stocks?
Thank you very much. Yeah, that's a great question. I think one thing that I really find, so to clarify too, I find with spready stocks, I prefer more expensive tickers. So huge examples: CrowdStrike had earnings day 1 and Wednesday. That's the type of thing I look for. Lululemon, Netflix, Meta, that type of where it's like usually at least $300, and you're going to have a spread that can go up to like $1. So what I want to look for specifically, for looking around key levels, like your high of day, low of day, previous support and resistance, what you want to see, especially if there's a catalyst, what I'll look for is just kind of see what we do on the bid and the ask. So if you're at a key level and I start seeing the bid get slowly higher by like a cent or two, like for example, you're getting 600.01, 600.02, 600.03, and the ask is relatively stable, then to me that suggests we're going to be a more bullish look. If it's the opposite and you have the ask going, for example, like 599, 599.99, 599.98, like slow creep to the downside, then to me that is going to be a little bit more of a bearish trend. Again, this is not going to be exact, but that's the type of thing I'll be looking for, because these spready stocks usually move in larger, I guess, areas. They usually jump like by 50, 20 pennies. So when you see them climb more slowly with that kind of precision, that to me usually suggests a change in sentiment. So that's usually what I look for edge in spready tickers. Again, usually around key levels. I hope that helps answer your question.
Great stuff. Anybody else on that? Thin, low liquidity, spready. Sharif, you love those.
Oh God, yeah. Any small cap gappers, Brendo, bring them my way. No, there's a good one today. Tisha Perkins yelled it out earlier. Let me have a look at what it's doing. Yeah, VCIG is the one I'm looking at, guys. And the reason I'm liking it right now, a very respectable area of support so far. So have a look. If you guys can pull up that bad boy, VCIG is what I'm talking about. It's got a great area. We're rejected $5 in the pre-market, $8. We danced around, we rejected 8.10 again, we danced and rejected it, and then we came down to a predictable level, that volume weighted average price at 450. We hold it, then we get the big boy break through that $5 area, and we make that pre-market high 565. But look what we're doing right now, VWAP and $5, both that $5 level right now that we're seeming to be bouncing off. So I like it because it's a price action support level as well as an indicator support level at $5. However, you know, these ones have a way of zigging and zagging at the open. So, you know, if you didn't get the break in the pre-market, I would wait for that 5.25 break and take before I work my way. Otherwise, get a small position, build it here at $5. And then if you get that 5.25 break and take, I'd add after the bell for that 575 or 565 breakout. VCIG is beautiful. It's doing volume, guys. 8.75 million right now. Great looking pattern. That's what I'm looking at.
Under 10 minutes to go, speaking of the bell, market overall back to basically flat here on the day. We're off the lows, which is good, but volume still pretty light as expected on a holiday. I had a good question here about Warren Buffett. We've been actually talking about this off camera, just in the office. Warren Buffett, almost historic high cash pile right now. A lot of people have very different views on his timing. Historically, his timing of going to more cash in the market has not been the best. Anyone with thoughts on raising more cash at this point with the market essentially at or thereabouts all-time highs?
I can chime in on this because I put this to Peter Schiff, so I'll just chime in real quick. I think he was selling Brendo because he didn't know who was going to win the election, and if Kamala Harris won, there was widely anticipated that she would tax unrealized capital gains. He wasn't going to have that, so he had to liquidate. Now, some people went into cash like him, some others went into gold. That's why we saw the big boy breakout on gold, and obviously some other people went into crypto. So I think he readjusts after inauguration because now he knows the landscape.
I think it's twofold. I think we've discussed, and I agree that would make total sense. And obviously, the adjustment would be like now he'd probably have to get back in. But you know, we've talked about the old Buffett indicator, right? Like U.S. Total U.S. market, stock market value. Throw that over annualized GDP, and that ratio has been, had it overbought. Basically, had us way too high historically. So in his sense, the market's been a sell for like almost a full year based on his favorite valuation metric. So I don't wonder if, it would be easy to say, he's going to start putting money to work back in January or beginning of next year. But I'd like to think that he might be very, very patient in doing so and waiting for a correction. What I'm curious about is, what if we're just in a little bit of a new phase for that indicator? And the thing is, I don't care what your indicator might be. I mean, he's talking about essentially GDP in relation to market cap. But when you have a major shift, the internet would be an example. I think AI is going to be an example here. Sometimes that's going to throw your long-term indicators out of whack for years at a time. And I'm not saying anything against Warren Buffett, but he could just get caught where something that he relies upon to give him an indication of when to be in cash could be fundamentally changed, and we could be in an adjustment phase, and he could have this one wrong. So I don't wonder if it's not more he just uses something as an indicator, and it told him to be selling, and it continued to tell him to be selling, and now he's got a huge cash position, and he's in some uncharted waters. That's what my gut's telling me here. Nobody's right forever. And ultimately, I have all the respect in the world for him, but I think AI has sort of changed things a little bit, and this is an adjustment phase, and he might have just got a portion of this wrong.
Just in general, from everyone here, What's your percentages right now? I mean, details obviously, but what's your percentages cash versus invested?
Oh, I'm minimal cash. I'm less than 10% cash.
Yeah, same.
I'm less
Same.
than 10% cash. Yeah, so it's risk on, absolutely. I think at this point. So yeah,
I'd have to. I think I'm like 8 to 10. I think, but it's entirely possible. Yeah, it might be a little bit less than that. It's somewhere in that range.
Yeah. Risk. I think it's risk on time, and a lot of analysts speak on we're in a multi-year bull market with the potential super cycle coming in with the Apple upgrade iPhones and just the AI movement. So I think we're in a multi-year bull cycle. So it's still fresh. I think
to this point, like I think it's more important to be like, well, but what would be high for you to be in cash in the first place? Because if you're never in more than 10% cash, and right now let's say I'm in 8 to 10, but I'm like never in more than like say 15% cash. That's more you know what I mean? Like where are you in that range would be the more important question than necessarily where you're at. Like someone who's essentially all in and never has more than 5% cash just stays invested, and new money just goes right in. It's all a relative sense. Because I actually like to me like that number is a little bit high in cash for me. And so I would argue, like I know you're saying you're all risk on. I'm kind of the sense that I can see a bit of a pullback coming. Like I think the Bitcoin being at 100, I think the shift after the election and getting this nice rally in there, you're seeing a little bit of a slowdown with Nvidia. The growth isn't what it used to be. The rotation certainly coming. And there's some stocks that I like in that rotation. Sean mentioned Walmart. I love like Caterpillar and the industrials there. But like I actually do see a little bit of not stagnation is the wrong word, but I can certainly see this move starting to slow down. There's certain signs of it, especially on a high end tech space. That's why I like in ASML something off the bottom a little bit here as opposed to those tops. So yeah, I think it's more relevant. Like, what are you in cash relative to what you would normally be?
Yeah, totally. I totally agree with that point, Needle, as well. It also depends your positioning of where and how long you've been in some of these assets as well too. But I totally agree with kind of some toppy signals. We are slowing down a little bit. It does seem as the Qs are lagging the SPY a little bit here for making all-time highs. But yeah, I think positioning when you got into these assets as well is really key to see if you can withstand that pullback. Because I always say there's times where you can get a better price, but if you're in nice and early and you have some nice comfort room there, a nice pillow to say, then I think you just continue to hold on to those positions and sit through some of the noise, and then definitely potentially add some on any dips that show up. I think there for sure. So yeah, totally agree with you there, Neil.
John, you want to add to
that? Yeah, I mean, I'm in about 5% cash, maybe a little bit less. I was actually just checking right there. Yeah, I mean, I think it all depends on what you're thinking about. Is that it? Oh, that was AMD just making. Did AMD just make a move down? No, it didn't. Okay. I was just thinking about kind of like what Joe was saying there, how we do have a big movement ahead of us. I think with the new administration coming through here, I really like what we're seeing. I mean, I don't know if some of those appointments will be any good or not, but at the end of the day, Donald Trump does base himself on, what the stock market's doing. And I think that we're going to continue to look at, higher, hopefully approval ratings coming through. And I think that will turn into positivity in the markets. I mean, I don't know, these tariffs are going to be interesting to see how that all folds out. And I just don't see any reasons really to get out of the market right now. That's the big thing. I mean, if you hold some stocks that have dividends as well, like you can catch some nice little wins there as well. So I think that you're holding in. We talked about some of the industrial names, energy. Even that XLE that I'm in is 3.2% or something dividend. So you can get a little bit of energy love there, collect the 3%. That's similar to what you're going to be getting on a GIC or a long-term bond, something like that, 3, 4, 5%. So I think you stay invested, you take the upside in what could be in the capital appreciation, and then you also take a little bit of the downside risk away from holding some stocks that have some yield. I mean, Pfizer's a little ridiculous at 7% now, but you could go and catch some decent names out there that even paying you 1, 2, 3% worth of a dividend, and it does take away some of that risk. We had a good call there by Joe with JPM. I mean, take some financials. Grab XLF, grab a nice little 2.5% yield there, plus some upside in the financials. I like all those plays. I don't see any reason to be sitting in cash right now, unless you're looking to buy some dips, which I think is time might be even now.
5 seconds, Katina, man.
That's the market's about to open here.
It's open, yeah. It's open now.
Right,
Yeah, we're doing the
Katina,
dips
man,
right now, guys. Just we didn't even look at the future real quick. The NQ closed at 20,000, basically 20,800. So we're looking for a defend of that. Obviously, maybe not off the open, but let's see if we can continue to pin that higher low. It's obviously likely going to be a light volume day today for anybody thinking. So people were talking in the chat. I'm like, one thing for sure, guys, if you're going to trade something today, make sure the volume is kosher, because kind of today is kind of known to be light volume. So you don't want to get trapped in anything. Keep an eye on the volume. I know Joseph always preaches about volume as well.
For sure. Yeah, Sharif, I messaged you in the chat. Did you see UMAC this morning?
UMAC? No, let me have a look. UMAC?
Yeah, it's definitely, I think that might be along your line.
AMD is tanking.
Yeah, no, I was going to say that, Sean. AMD is an absolute, when you said did it move down, yeah, it went from 137.20s to 136.20s in a matter of like a couple of minutes there. So
yeah, we even have it heading lower right now. AMD, 135 and change, 136, down about a bucket a bit, leading the way to the downside here.
Yeah,
that's the thing.
All right, overall,
that early volatility, man. That's what happens. But it's already going to try to reverse. So that's the thing. Like, remember, money is going to get the work done in the first half an hour and then slow it right down. So you're going to get some crazy action. That UMAC is a mover, though. Like I like that one. If you trade things that are going to go today, Unusual Machines looks like it is going to run.
Yeah, it popped up on my scanner this morning. It had about 11 million shares traded before the open, so I decided to take a look at it, and I'm just reading a little bit about it now, so I can get back to you guys on screen as well too once I figure out a little bit. I think it has something to do with Elon here. He might have tweeted something about it, so I'm just going to continue to.
Well, that UMAC was on Donald Trump Jr., wasn't it? He joining that board.
I think so.
That's what it was. That's what it was on Wednesday.
But it's
is it jumping that UMAC? It's not doing that much. It's down to 1377. 13. Yeah, I guess it's back and forth a buck here, starting to go. Yeah, okay. I did a little bit of research. It's actually 65% of Black Fridays are green on the S&P 500. So, if you're going to play one way or the other, it looks like the green is starting to win right now. S&P 500 up 0.15, NASDAQ up 0.5 right here. Dow Jones Industrials up 0.37. So VIX even up today, slightly up as well. So we'll have to wait to see what winds up happening. Dollar strength slowing down, about flat there today. UMAC, now bouncing around at 42%. AMD's recovering too.
Randy's camera is throwing me off. Randy has one of those high-tech iPads that follows him around his room. So Randy's in the house today. We'll talk about EVs maybe here in a bit. For anyone just jumping on, if you missed the first hour, we're doing a Q&A. Hi, thanks for jumping on with us on Black Friday. Any questions whatsoever, throw them in the chat, market-related, whatever you want to talk about, throw them in the chat. Bears versus Bulls, going to pull those out and send them through to us, and we'll get as many questions answered as we possibly can. Hope everyone had a wonderful Thanksgiving and enjoying your Black Friday so far. What did everyone go shopping for? That's what I want to know.
Absolutely nothing.
That's exciting, Sharif. That's very exciting.
I know. Well, I was looking at making that iPad purchase on Black Friday, but that already happened, so kind of sped that up. I've been keeping my eye out for some accessories, so I'm gonna look to see if I can weasel in a wireless keyboard for the iPad. Some good deals out there. Amazon's got some good stuff. Walmart's got some great stuff right now too, guys, and they're shipping, by the way, next day free. So kind of trying to put Amazon to the fire there.
Walmart. Yeah. Oh, okay. Nice to see that one. I had that as a pick. I'm looking for winter tires, so I'm doing that. I was actually looking. Amazon has those, so I have like a bunch of Ring products around my house. So I was debating upgrading some of the cameras, but you don't really need to. I don't really need to do that. Like what's the difference between 1080 HD and 3D motion cameras? I feel like sometimes you get a little bit too excited with all these different opportunities.
You remind me that I wanted to look at some of that stuff, because last time you were showing me those features. I need to get that for the house, for sure.
Yeah.
Just a couple of things here. Google's not looking very good. It's dropping a little bit here. Yeah, I don't know if we actually get into, and we can talk about like levels and this and that. I don't know if you're actually going to get back into that 50 period on the daily, but it was like a 164, and it's a couple of dollars away from that right now, but it is looking a little bit heavy. So I know we're supposed to be green because it's Black Friday, and because Sean's wearing Packers gear, but Alphabet deciding that it doesn't want to participate. That's one of the companies. So like when I say like I've got some cash around, it's because like there's some things that I wanted to buy, and I held off on buying Alphabet because I wasn't sure it's right time to pull the trigger. But after that whole speech about long term and all that nonsense, it doesn't make any sense. Like I'm actually looking to pick up some of that. I'm adding to my Caterpillar as well. That could be a good one. I haven't looked at Palantir yet because I've been enamored with SoFi. SoFi also looking pretty good.
Randy's dog's making an appearance.
Yeah. So, there he goes.
What's up, big boy?
I wanted to mention our friend Danny Ives boosted the price target today on Tesla to 400, reiterating an outperform. So he's taken the much needed time off to reiterate his position on Tesla, guys. So Tesla's green right now. It's almost 1%.
Mm-hmm.
Not really. Mention that.
Yeah.
It's worth noting too, if I might.
Sorry, go ahead.
Oh, sorry. I'm just going to jump in quickly on that. Tesla price target too with Dan Ives is actually on the watch list too. One of the things that he said, basically the whole bulk of the price target and the overweight rating maintained had to do with the situation regarding potential California EV credits. Should Donald Trump get rid of those EV credits for the country as a whole? Basically, we know that allegedly, or at least reportedly, Gavin Newsom, who's had some beef with Tesla CEO Elon Musk in the past, is likely going to exclude Tesla from these EV credits. But basically what Dan Ives had to say is this actually could give an opportunity for Tesla to do some other things. For example, actually move some of its factory workers from its Fremont, California factory to Austin, Texas. So there could be some opportunities, I guess, stemming from this for TSLA. So I just wanted to address that. And thank you, Sherry, for bringing up that price target increase there with Dan Ives of Wedbush regarding Tesla.
Yeah, they're like, he's pounding the table obviously on them all the time. He's a fan. So we're kind of not surprised by that. But I guess what I was really surprised by was the fact that he took Thanksgiving as an opportunity. Guys, I wanted to mention Mara's moving up big here. And Mara's, look, it's still tight, locked within the range that we talked about, that 28, 29 on the video that we released online. But Mara is strong on the day. It's up 5.5. I get it. Bitcoin's up 2 3/4. It's 97,470 right now on Bitcoin. But, Mara's outperforming right now. But you got to look at Riot as well. Riot's up 5%. Clean Spark's in the clear, baby. 7.5% here. Hut 8 underperforming under 0.5% right now. But you got MicroStrategy's green on the day. Kind of the outlier of the group. Not really sure why. Coinbase down 0.5% right now. Everything else on my crypto watch list, greenery, including Ethereum, which is also up 1 2/3, guys. So not sure what's going on with Bitcoin.
Bitcoin crossed 97.5, and I think like we've been talking about the follow plays have been good. So like the miners which are following, I think have been good, and things like Coinbase had already had a spectacular run this year, so it just hasn't been as strong on some of these bounces as we're consolidating off 100,000. Coinbase just hasn't been participating. It's Mara which is getting off the schneid, and this is what we always talk about. Sometimes when you get a little bit toppy, what are the things that haven't really exploded yet? And they can give you a little bit more juice for the squeeze. I think that's what's happening over there in some of the miners. But do keep an eye on Bitcoin. We haven't talked too much about it, but on a light volume day, you can sometimes consider it like a weekend. Like Bitcoin could decide it wants to go on a little bit of a run, and that 100,000 that we haven't seen anything happen with except resistance could turn into a play. Like I'm going to make sure I just keep an eyeball on it. 97.5 just recently breached, but with Mara going, Clean Spark, all those bad boys, don't ignore spot Bitcoin prices. I think that's going to matter.
100%.
Absolutely. Yeah. And Sharif, just to add to your Mara point there, I really liked it this morning. It popped up on my scanner as well too. And then it opened up right up on the July highs too. So I like that. It broke some key resistant levels there, and then I guess this can add to a little bit on why it is trending today. So yeah, I like that call out there, Sharif.
Yeah, it's strong. And like Joseph, I want to get your take because you and I talk about this a lot. We've been talking about what Bitcoin may or may not do. Going into the new presidency, this, that, and the other. I got a little bit of a bias, Joseph. I don't know. Let me give me your opinion on this. I think we whiffle and waffle in a $10,000 range, maybe a little bit at low 90s, maybe a little bit high 90s, and then something happens. That catalyst comes in. We get a big news headline from whoever on whatever Bitcoin related, and we get that big boy breakout of 100. What are your thoughts on that?
Yeah, I totally agree on that, Sharif. I know we were talking about just the relative strength in this thing. I think we are both kind of eyeing out a little bit deeper of a pullback, but as of right now, it doesn't look like we are going to get that deep of a pullback. And I'm not saying that it can't, but I said to you, Sharif, either this thing is so strong, I don't know why my thing went out there. Either this asset is so strong that we can continue to the top side, or we do kind of whiffle and waffle a little bit here, kind of trade within that $10,000 range that you mentioned. But as of right now, what the price is telling us is that this underlying asset is extremely strong. And I do think if we do continue on this type of path, that we might see a little bit north of 100,000 in the coming weeks or so. So I agree with that. I agree with you on that front. But again, just from what price is telling us, this thing is strong. So I do think we break that all-time high.
All right, Joseph, I wanted to mention Apple strong today, higher low, gents, over Friday or whatever Wednesday's close. We're a higher low today, and we're looking possibly here about taking out the Friday or the Wednesday highs. For whatever reason, boys, we've been rejecting 235.75, 235 and 2/3. We've been putting in that higher low. Brenda, you mentioned this, I think, on the Wednesday rundown in the morning that we were near all-time highs. It looks like we're really dancing towards that again, guys. So eye out on Apple here. I know it's the opening range and we get a lot of volatility, but I'm seeing a higher low.
A lot of people going to be possibly buying a new phone maybe on Black Friday. So yeah, definitely good call. Sharif, I got a question that's right up your alley here. Again, guys, anyone with questions, throw them in the chat. We'll get to them here as we make our way through the morning. Once again, thanks everyone for jumping on for a Q&A, Black Friday Q&A. Sharif, this is about Archer Aviation, ACHR. My question is, with Cathie Wood and BlackRock loading up on Archer, what are your guys' thoughts for the long term? For anyone that's unaware, that's an eVTOL company. They're doing the flying taxis, I think, in New York. So ACHR. I just looked at the chart. It looks great.
My first comment on that, Brendo, is where do I sign up? That's my first thing there. No, but that's a separate issue. It's a beautiful looking chart. Great breakout there. That November curl. It's really aggressive. It's above the 200-day, above the 50. You also got the golden cross, guys, on the 25th. The 50 exponential did cross to the upside, the 200 exponential. Let's have a look at the weekly, see what kind of look we got on the weekly. Yeah, we took out highs on the weekly. This is a good-looking chart. There was certainly resistance around 7, and then with the highest point being at 8, that takes us all the way back to August of 23. We've taken out that level being at 905 right now. There certainly is a resistance level at 10, and that takes us back to our SPAC days on Archer. We were dancing with 10. That's what SPACs do until they de-SPAC. So that $10 level is going to be the next area of major resistance, I believe. We're not far away from it. As I spoke, 909 now, the high of the day. This is a good-looking one, man. And you know, whatever form factor we end up getting for these eVTOLs, whether they're moving people around or goods, there's going to be a place for them. There's a commercial viability for them. So I like this space. I don't know specifically about the company, but the chart looks great. Neil, what are your thoughts?
Look, you know what I'm going to say for that. I think everyone that thinks that that these are going to be around and everyone's going to have one and we're flying around like it's in Back to the Future, that's not where it needs to go. I mean, ultimately, it matters more about shipping things, delivering, and then replacing helicopters in terms of the niche market for essentially like high-end Uber, that kind of thing. I think that's where it's going to be. Like, I believe in that. I don't believe in the one, like, I need to be flying around in one of those. You know what I'm saying? Unless I turn into Mark Cuban.
Oh
at some
yeah,
point.
the Jensen.
I do.
Yeah.
And look, like you said,
Jensen, sorry.
yeah, the chart speaks for itself. You know, ultimately, like that is one that's on a bit of a run. It's well inside our own, 28% short float on it as well. So it's definitely got some juice behind it, so to speak. But when like everyone's like, oh, fundamentally, they're not replacing. You don't look at that. Don't look at those things as replacing vehicles, because autonomy and these eVTOLs, that can go part and parcel. Just understand that for the majority of like human transportation, I'll stand by this one. Autonomy is going to change everything for that, because once you have 80-90% of the vehicles on the road that are autonomous, you don't need anything else. The level of efficiency that you will achieve and the amount of infrastructure that we have to accommodate that is so effective, it's just not going to matter. And as you can tell, that's probably why I like Tesla.
Yeah, speaking
Randy,
of Tesla,
I got a Rivian question for you. Hold on. This is from Noah. My question is how the guys think Rivian's price action will look today with the announcement that EV tax credits are going away with the new administration.
Yeah. Well, tax credits across the board are, as we know, Tesla's been a victim themselves, are going to become an issue. And this is not just the US, it's globally. You know, there's governments who have been doling out tax credits for years and have found that, you know, the market's going to do what it wants to do. The consumer will purchase an EV when they're comfortable, when there's no range anxiety. So if the tax credits go away, these companies have to be leaner, and you know, the most fit companies are the ones that are going to survive. And we've seen a lot of the ICE manufacturers this year absolutely suffering because they're having a difficult time getting into the EV space and still making ICE cars. And I think it's really hurt their profit margins. We've seen the stock slide this year. The likes of Volkswagen, Nissan is in deep trouble. The Japanese don't seem to have an answer for the Chinese EVs. If BYD and some of these bigger Chinese EV makers can move into Mexico, and there are tariffs, you know, from the new administration, even from Mexico, even from elsewhere, they're going to find a way in. I think it's going to happen at some point, and the remaining companies are going to have to either going to have to get lean, or they're going to have to exit. There's no strategy here,
Randy,
to get around them.
I got a question for you. Let me put this to you right here. What are the chances that Donald Trump or his administration, through his administration, they remove, let's say, the EV tax credit on a pure EV, on battery EVs? But what are the chances that they give you something on a hybrid? Because that's what we're seeing all the manufacturings go. Let me throw this to you. So look at the new C63. You and I talked about the new C63 being a 4-cylinder hybrid. It's got more power than the twin turbo V8, but it's also got less range anxiety than a pure EV battery. We see Li Auto doing this as well in China, where they've got 1,400 kilometers on range combined with electric and what's it called, and battery. Like you can do 250 just on battery alone, kilometers that is, and then about 1,400. How do you feel about that? Maybe he throws in a tax credit for that.
I don't see it. I don't see a state or a federal level tax credit for hybrids. Don't forget, hybrids have been around for 20 plus years. The Toyota Prius has been around forever. They weren't handing out credits for that. It's still burning oil. Okay. There's no transitional credit that's going to force people to move from their larger V8 powered pickups to a hybrid. Yes, there's hybrid pickups out there now. Are they selling like hotcakes? No. There's no reason for it. I don't see the federal or state level or even other governmental level incentive for hybrids. I don't see it. The transition is more for the consumer. It's to reduce range anxiety. It's to get you into a quasi EV space, so you can go out and buy your car of choice that has a range extender or actually has a full hybrid, whether it's plug-in or otherwise. But no, I don't see it. I don't see it at all. There's no incentive for government at any level to help you choose to move into a hybrid. Yes, it's going to burn a little bit less fuel, but there's no reward for them. There isn't. I don't see it at all.
I mean,
there's no incentive.
I don't personally like them, but that's what seems to be in vogue right now. These manufacturers keep pumping them out.
Isn't this why GM went full skip hybrid, go all the way to just go all in? Because if that's the end game, they decided they just wanted to push for it and skipped the lucrative market for the opportunity to just say, we know where things are going to end up. Let's just focus on that, laser focus on that. And it seems to be working out okay for them.
It seems to be working okay, except there's a whole class of consumer who are range anxiety bound, we'll call them, who don't want to have, if you're a contractor, if you're moving equipment, you can stop to 45 minutes and charge somewhere. You've got work to do. So there are a class of consumer who are absolutely tied to the fuel pump for now, until range gets better, until battery technology improves to the point where we have 800 miles of range you can charge in 10 minutes. We're not there yet. Until that happens, I don't see this huge volume of consumers switching immediately. Is a hybrid a solution? Possibly. That's up to you. I don't see the government absolutely, helping people choose which vehicle they buy. And there's no incentive for them whatsoever. GM, Dodge, Stellantis have come out with hybrids. There's a new range extended Ram coming out that will give you, 800, 900 miles of range, I think. Is it perfect? No, but it helps reduce that anxiety. It'll help sell vehicles. And that's what they're betting on. GM's gone full hog on the pure electric play. They're expensive. They're not a cheap vehicle.
Let me ask the Katina Man something. Katina Man, I know you're sniffing around for a Golf. Would you be interested in a hybrid Golf, or is that not in the cards? Sean?
I keep losing connection. Ask it again, sorry.
Yeah. So I know you're sniffing around for a Golf. We were talking the GTI right now. If there was a hybrid model of that, would that be interesting? Like, would you even consider that, or that's not even in the cards?
No, I don't. I mean, to me, you choose it maybe for the environment. Like, gas it's expensive for sure, and I think it's a pain in the ass to keep going there and filling up and doing all that kind of stuff. I mean, Randy had talked about it before as well. Maybe we would be getting some charging stations or something at the office. I could definitely put one, in the house, which would be a problem. A hybrid, I think, would be a little more attractive to me than a full EV car. But yeah, I don't really have a preference too much between EV and standard engines. So for me, no, not too much of a difference. If Golf came out with an EV straight, yeah, I'd probably pick that up. I mean, you want to try to join the generation. But is it even healthier? I mean, trying to mine all these batteries and getting them all out, and the thing is, there's some environmental issues with all this as well, right? I mean, I don't know where we are going to be in 10, 15 years when all these batteries are sitting in landfills and stuff like that, So I'm just not sure. SMCI, by the way, just had a 10% bounce there. So it was actually down 10% in a nice move. It just bounced off $31 there, SMCI. As look what's happening, man. It is your Black Friday bonanza one more time. Every single index right now up. SPX up, NASDAQ up, Dow Jones up again here today. SMCI down 10%. AMD, I thought at one point went back to the north side. Again, the chart's trying to load up here. Yeah, so AMD now positive on the day after having a nice move downstairs. So AMD right now is looking really nice. If you guys have a chart up, trying to break the pre-market high right now in around 137.80 there. So I think AMD trying to rip a little bit higher, starting to go here.
We're frozen. Look at the stream. The stream is not working. Okay, Ram's I think relogging back in. Here we. Yeah, we're still not in right now. So, I don't know what's going on, guys. I don't know if they can hear us. Here we go. Now
Type
we're
in the chat
back.
if you guys can hear us.
We're
There we go.
back.
We're back.
We're back.
I have
Okay,
it up
good.
on the TV here. It looks fine to me.
Yeah, I thought we were okay though. We were okay there.
Yeah, we're good.
Yeah,
we're
all
good.
I was going to mention was Robinhood, which was trying to break out, is starting to pull back in a little bit here. You had a little bit of a gap up there and pulling right back. I think it's a good there's a good support level in the high 38 range for Robinhood. We've seen some of the crypto adjacent names try to run. So I think that one should be on our radar. You're almost at 98,000 on Bitcoin right now. So I think we tagged right close to 98. So there is a bit of a rally happening in Bitcoin. So all those adjacent names, Amara's, maybe Coin's trying to go as well. The Hoods.
The short float is on Archer Aviation. I've got my ideas loaded up. ACHR, excuse me, is the look there. So the percentage float that is short, where is it at? On the lead, with the last 2 weeks obviously being the most aggressive of the two. So Archer Aviation is, this is really interesting here coming in. If we break that 10, that could be big.
All right, guys, just stand by. We're having some Zoom issues right now. I think we're good. I think we're back, possibly. If you guys can hear us, just let us.
Yeah.
People are
know. It's a Zoom problem right now.
Short.
All right, let's get some more questions going here. In the meantime, we got a lot to get through, so I want to keep plugging away here. This is from Skelly Gaming. How much do you all weight fundamentals like dilution, debt, short float, institutional ownership, etc., over technicals? And this is specifically for intraday. So fundamentals versus what the stock is doing right now for an intraday type of trade.
I mean, they're just an add-on. Like if you're choosing between, like, you've got a few runners that you're looking at, then something which is heavily insider owned and there's not going to be as many available shares out there to trade, I think it'll have a better extension on it. Like that's the kind of thing that I'll consider. And then, a company that has a history of dilution, then maybe first of all, I hate swinging those because you can get punked so easily. So I tend to use it only as something as an add-on to your technical trade. If I've got 3 things that I'm looking at and they all set up for breakaways, and one has double the institutional ownership, higher short float, does not have a history of dilution, those are things that would just make me pick over the other symbol if the 2 things are the same. But I find that if you're a day trader looking at technicals, you kind of go there. You can break some ties with fundamentals, but I try to keep those 2 worlds apart.
Yeah, I don't really look at fundamentals at all for intraday stuff. I mean, I think that we look at them when we're trying to build up our catalysts, and we try to figure out why is a level breaking. But at the end of the day, it needs to be followed up by the actual physical technical breakouts and things like that. So I think if you're going to look at fundamentals, better for swing plays. And I just like to say, if I'm going long on a stock, does the catalyst that I'm looking at support that? So that is a fundamental
Exactly,
reason to go
Sean.
long or short.
Exactly. Because
yeah, so it's just like
you trade the microchips, you're always up on the semis, and there's a reason why, because they're moving all the time. Like you're always killing it on the semis because they're hot, right? And that's kind of fundamentally they're hot as well, right? Like,
yeah, you always want to trade something that's moving, that has maybe a higher relative volume for the day, things like that, higher average daily volume, and then breaking out through levels is key. If a stock is just hanging out in a range, you're just going to get chopped up. And I mean, at the end of the day, that's not what we're looking for day traders, and especially on a day like today, where the market's going to close early. You're trying to look for names that are actually moving around, which is why we're talking about that SMCI moving, which is why we're talking about Palantir back near that. China. If you're going to go short something, maybe fade any pops in FXI today, as Alibaba trying to get to the low side as well. So uranium's having a huge move today, up 3.5%. That ETF. So I'm going to try to. Yeah, what is that, over $30?
Oh yeah, SMR is having a great.
I haven't snowed any
day today. 31. Actually, well, it broke 32 and pulled back, but new scale looking
up
very,
14%.
Very good. Dude, it's crushing it. And then even what's the other one? Nextera. Is that the one? No, it's NNE. That's the one. I always get those two mixed up. It's nano nuclear. NNE is also up as well. That's back above 29. So you get it's a great move here. Like Nvidia is breaking out over 138. Bitcoin did take out that 98,000, as you said, Sean. Is like it's typically an up day. Everything is looking pretty strong. I did see Tesla pull back a little bit, so like maybe that's not as strong as it was earlier. But you get the rebound in SMCI, you get the breakout in AMD, you get the breakout in Nvidia, you got Boeing. I love those nuclear names, and they just continue to go. Even when, and we were talking about gaps before, even when these things pull back, they're essentially pulling back to like prior highs and holding. They're not breaking multiple channels back in. It's a great continuation move for all of them. I'd love to see it hold that. I mean, if we can hold above 32 today on SMR, that's going to look fantastic for sure. Still have a long time to go here. SoFi broke 16.5. Blake just said MSTR's at the high of the day. It wouldn't be too crazy if we made some kind of a test over 99,000 today. It would make some sense to me.
Okay, guys, just stand by. We're gonna try. I think we're back actually. We may have to restart the call. If we do, we'll jump back on right away. We're just trying to figure out the connection issues that we're having. Okay, great. Lots of great questions coming in still. If anyone has a question, please throw it in the chat. We'll get to it. From Buy Low, Sell High. Please tell the team that this show has completely transformed my trading, and it has been life-changing thanks to everyone. So not a question, but a statement. So thanks again. That's from Buy Low, Sell High. Shout out to Buy Low, Sell High. Question to anyone: is TSLA a good alternative instead of buying Tesla shares?
Yeah. From an intraday standpoint, I think using those leverage products and leverage, you can add a little bit more, and then you get those bigger percentage metric moves. But as for the long term, I think they do depreciate a little bit more just because of the leverage of it. So they need a lot more to move in order to gain what they have lost. But yeah, from an intraday standpoint, they're fantastic. Yeah.
Yeah, that's all I would say. Like, they're trading vehicles, right? Like, so there's never an argument necessarily against trading them if you're just a short-term trader, a day trader, short-term swing trader. But if you're investing in the long term, that's not the way to go if you're investing in the long term.
Exactly, agreed.
Yeah, these levered products will become unlevered to the point where it won't be 2-to-1 or 3-to-1 because of what happens with the options, right? I mean, they got to keep on buying forward options, so that keeps on sort of depreciating the ratio. So you don't want to hold that over time. It's like if you look at the difference between the TQQ versus the Qs, it's not going to be 3 times the leverage over the month or over the 2 months. So you do get those option degradation right there. So, Joe, what do you got going on for next week? You looking at anything option wise? Looking to write anything, put anything on?
Yeah, you know what? I don't have anything planned out right now, Sean. I do my due diligence on the weekend, but we are going to be looking to write some potential options. Some things that I do like, and one thing that I am keeping an eye on is Apple, just because we are close to those all-time highs. So I want to stay bullish on this underlying. So I will look to possibly construct some bull put spreads on Apple.
That's my man.
Exactly. So exactly. So as we creep in on those all-time highs, I don't know if we'll necessarily reach there today, but we're gonna stick to things that are strong, Sean, and that is app. We really like Apple, so yeah, we're gonna look to construct. As I'm looking at my technicals right now, something around the 227, 222 bull put spread expiring in a couple of weeks.
So Joe, that goes to the point where we were just sort of talking about before, right? Is where you like the fundamentals, because I've heard you talk about sort of the cycle that's going to be happening there, the super cycle with Apple, and then so you talk about the fundamental side of it, and then at the same time you then just talked about it technically breaking out again through the top side. So we did have that question from Brendan a couple of minutes ago about technicals, about what we're looking at from intraday trading ranges and things like that. I think that you just sort of nailed it right there with talking about how we like to use a combination of both right there. You like the story going long, plus you like the fact that it's breaking through those highs. But I got to ask something to my guy over there, Mr. Mike McCarthy, because you recently, Sharif, trimmed out some of the Apple position. And again, I think it's been a great run for Apple there. What are you thinking about this? And just, I didn't hear it because maybe you might talk about it on the stream there. Was it a position where you got out of a quarter of the position, 10%, 50%? What are you thinking about Apple? Because I know it's something that you like to talk about a little bit on the stream.
Yeah, Katina, man, we took out 20% there at that 230 level, like minus $1. It was like in that, not even like the high 229s. We went our beak on some profits. The only reason that we did that, or I did that, but was strictly because of the tariffs. Now, I want to say something. Donald Trump's shown his propensity to give Apple a break in the past. Does that mean he continues to do it in the future? I don't know. He's singing a bit of a different tune this time. He's not as aggressive with China as he was before. That's kind of been, for whatever reason, taken over by the Democrats. In any event, there was a little uncertainty there what the tariffs have meant. So I'm like, let me wet my beak on some profits. It's by no means the end of the trade for me, brother. I mean, I'm still waiting for that super cycle that we have all been talking about. But Katina, man, if I want to add one quick point, we all know that Q4 is the big boy quarter for Apple. That's when they sell all their iPhones or whatever else they're going to sell for Christmas in the holiday season. So I want to see, are we going to even get hints of the super cycle, or are we going to have to continue to wait for the actual release of the AI products, not this little, introduction kind of thing we've been seeing? Let's find out.
I think you're gonna find out huge. I mean, they're right now on Black Friday. They're blowing out those AirPods, which you and I have talked about. Those are like a great value right here. I think the service business is just absolutely monstrous, and I think it is a little telling that we did have Berkshire and Warren Buffett sell such a huge part of that. So. And look, there's absolutely nothing wrong with taking some off the table there, because, like when Palantir went to $48, I was like, damn, $48 looking pretty nice. Took some out right there. Then it went to 53. I was like, oh man, that's even looking nicer, And then now as you get the Palantir up to $66, $67, I mean, at some point you do got to bring the register on some of these plays, right? I think, absolutely nothing wrong with doing that. We talked about SMR. I'm getting a little nervous right there because as shaking
we're
my
just getting started with that.
I think that's an earlier stage.
They don't make money though, but they don't make money.
That's the point. To the point of when you're talking about selling and bringing the register, I think sometimes it comes down to have a plan of action for like what's the money going into. A lot of times, like if I kind of know, hey, look, I want to sell this because it's made a great run and I want to reallocate that money. Let's say you want to rotate it, right? Like maybe you're up top, you want to take some money off of Apple because you want to buy a dip the next time a Walmart dips or like a Caterpillar dips. Like that's generally where my head tends to be at. But I think SMR is a little bit earlier in the stage that I almost want to be holding on to that one. But just by the way, for everybody, like we're still like the market is still looking very, very good, and
the market's flying.
Bitcoin is extending. We're almost at 98.5 on BTC. I was just checking out. I know, like obviously we're not actively trading here today, but I mean Nvidia just tagged 139 and is continuing to go. Remember, we're consolidating, breaking 137, then 38. Now you're still flying higher. Your boy Sean, you were just talking about it. Palantir's got a top at 67, which I kind of feel like we'd be breaking out if we were sitting there here today. So there's a lot to like in this market. I'm not really seeing too much of anything that's dogged, although I will note Zoom stock is not doing very well today. So maybe
Oh no.
just gonna throw that one out there. It may or may not be related to the issues we've been having, but no, certainly it's been a very good day for the market. Black Friday, no sales on stocks today.
One thing that you really wanted to quickly jump in with, if I may, is PRZO, it's dropping right now, but I know Miss A in the chat was asking about this one. So pairs zero, we're up over 100%. This is a bit of a small cap gapper here from what I can see. Got a market cap around $16 million, 19% insider owned, float of about 9 million shares. There's a catalyst with this one too. They are, I guess, drone related. Apparently their drone system received some regulatory approval in Europe. So good look there for PRZO, though it is falling a little bit, finding some resistance from what I can see around that $1.70 level. Right now, it's at a potential support area there of $1.50. Really quickly, too, I wanted to jump in with the Apple AirPods. So that, of course, going to be something on watch here with AAPL during the holiday season. But also, they just dropped, I believe, as of this morning, an ad for the AirPods, which features that new hearing aid feature. Yep. I've talked about this on the stream. I think this is someone who uses a hearing aid. I think this feature actually could be huge for AAPL. And I think especially given that hearing aids are a bit more expensive for sure if you don't have coverage, I think the fact they're building this into the AirPod is really innovative. I'm really excited to see how this feature ends up faring. So just wanted to put my 2 cents in on that.
Yeah, and Brendo, I wanted to bring you in for a sec because this is something that you were talking to me about, to build on Adair's point, that this expansion of the medical devices at a point of sale, like where people kind of take their own health into their own hands, and by, obviously having as much data as they can. And, these kind of medical devices like the Ring, the Aura Ring 4, I believe, is coming out real soon. Any thoughts on that?
I think it's more, there's going to be a shift towards general. So you have maybe 2 separate types of devices, the more quote unquote fitness trackers, and then the more quote unquote health in general type trackers. So it seems like anyways, companies like Apple, Whoop is another one. Neil, I know you have a Whoop as well. It's more a general health tracker versus a fitness tracker. It does, allow you to track fitness and workouts and things like that. But it just seems like there's going to be 2 completely separate worlds. There's this, I even think the health side of it is going to be bigger in the end from the standpoint of, sleep tracking, recovery, fitness preparation in general, whereas the Garmins of the world are more concentrated on actually tracking your run, actually tracking your workout at the gym versus more health specific type data. Neil, I know Whoop specifically is really good on the sleep tracking side.
Whoop is fantastic if you're very serious about your workouts and optimizing them and in your gains and your training for something. That's why professional athletes use it, and that's what it's all about. But I'll tell you this about Apple. I'm not an Apple person. I own a lot of Apple stock because it's one of my biggest holdings, but I've never been in the Apple ecosystem. But I sleep easier at night because my parents have the iWatch, and ultimately, at the end of the day, I think it's the type of product that eventually, you're not going to want to be alone without it, and we're going to be in a world where everybody has that available. You have a fall, you're good to go. You have an issue with your heart, you're going to be able to detect some abnormality before the worst happens. And given the fact that we also, of course, we don't really talk about it as much with the aging populace, it's just even that much more important. Now, that whole aging populace thing, I think that even lends itself well to for Meta as well. Not to jump back into Meta in the VR, but I think my pops isn't going to be flying halfway across the world to watch cricket, even though he loves doing it. But when he has the opportunity to put a headset and be at the match, that's going to appeal to people who aren't going to be out and about as much as they would normally and have money to spend. So like I think that side of devices and the price point of these are so reasonable for a certain for a certain segment of the population. I just feel like they both win. I happen to think like it's a little bit more new, the headset, but Apple, they're going to be a winner. There's no question in that space. Like I'll tell you, we like if you were thinking about getting your our age, you're thinking about getting your parents like a gift on Black Friday, just the peace of mind that especially if they're a little bit older and have some health issues, the peace of mind of having that watch on them that's going to call 911, that's a big deal, man. And anybody that can have that, you'll sleep a heck of a lot better now. I tell that from personal experience.
Neil, I wanted to talk a little bit quickly about the chips and the semiconductor because clearly they're extremely strong today. I would say that they're leading the market right now. You've got the likes of NVIDIA knocking the door of 3%. It's trading at highs. And AMD, NVIDIA, ARM, Broadcom, they all look the same. They're all trading at highs. They're all putting in higher highs and higher lows into like the breakout area. I didn't have a look at seeing some of the others. Taiwan Semi kind of looking the same business, trading at highs. AMAT, Applied Materials, not one that we obviously talk about all that much or there's that much volume at all. It's trading the same. So basically, if you're looking at for a strong sector on the day, it is certainly semis, microchips. They're trading at highs right now with the leader NVIDIA up almost 3%, guys. I also want to mention quickly PRZO, the one that Adara was telling us about. While she was talking to us, it was halted at that $1.50. It's since reopened. It was a 5-minute halt. It's trading above the volume weighted average price, which is at about $1.33. And I should also let you know that there's likely support as well, not just that VWAP, but there is a halt level at $1.25. We're still trading with higher highs and higher lows, but the last halt was a down halt, guys. So up 132%, small cap gap.
Yeah. Just to add on to you there, Sharif, I mentioned last week that we found position for NVDA. We had that indecision day with that big session on Wednesday, I believe it was. So yeah, we're really recovering with that. I really like the bounce there on NVDA. But Sharif, Bitcoin is knocking on the door of $99,000. Yeah. So we're sitting at 98.5 right now. I think this is a massive inflection point. Can make an all-time. Yeah, wow. Let's see if we can make an all-time high here. Do this. I think this is really, really important if we can get that momentum to continue. And if we do decide that we want to breach 99, I do think that 100K, that six-figure price target is definitely in the talks for today, possibly. I don't want to get too ahead of ourselves, but just with the overall strength from what I'm seeing from some specific technicals, that momentum can push us to that all-time.
Well, also keep in mind, like Solana's approaching a double top. It hasn't broken its recent high. Ethereum hasn't broken its recent high. And it's very, very close. Like ETH could make another or a fresh high. Bitcoin's trying to take that 100,000, but it's not just Bitcoin going. Solana, ETH, they're all having very strong days today, and that's some technical breakouts pretty soon. So, like again, if you're watching these markets, it has been a long. I'm with you on that NVIDIA. Remember, there was the ASML news or just the China news that you could have some lighter sanctions potentially with the semis going toward China. So that's why they were all on the watch list, and that's a possible reason why you're seeing an extended move on them here today. Plus, NVIDIA had been kind of languishing is the wrong word, but NVIDIA had been, let's just say, consolidating or holding in that mid 130 range, and you're finally getting a bit of a relief rally. AMD's been in a downward channel; it's trying to bounce out of as well. That we've been talking about, but all eyes on crypto here. I'm watching actually ETH now try and take out. It's got to get to 37, but it's getting pretty close as well. Solana at 260, 246, getting close to some highs. Crypto, baby, looks like they like it on Black Friday.
Neil, and there could be some interesting resistance on our friend Mara. It's almost at that $30 level, believe it or not, 29.66 HOD on this bad boy. It's increasing in market cap, knocking the door of 10 billion now. Was still not in change, to be fair. So yeah, $30 incoming possibly on Mara. Should be interesting whether we find resistance there or not. Everything's running. And by the way, Coinbase, green as well, but definitely underperforming all the other names, up 1.25 right now. So Coinbase kind of lagging behind the bunch there in crypto world.
Yeah, Mara up 9.5% on the session so far, Sharif. Really nice breakout call there. I really like that one.
That's got
Guys, we have
to like 31, 32 on the daily. Go ahead, Sean.
we have Ripple. Like Ripple is ripping. I mean, XRP right now up 22%. It's actually Bitcoin volume on Coinbase 750 million, Ripple 530 million, Ethereum only 370 million right now. So it's stuff like Stellar Lumens. I mean, up 15%. Yeah, Bitcoin starting to go crazy. I want to bring everyone's attention to, if everyone just calls up like a VIX chart. I mean, you are at this $13 level here on VIX that I just think, like, you had that huge spike up into $60, $65 back on August 5th. If you get like another black swan event here with Donald Trump coming through, and just something happening in the market, whether or not it be something about China or whether or not, I don't know. The tariffs are just not well received, or he doesn't get all the appointees in there that he wants, or I'm not sure exactly. I know Wall Street really likes some of that hedge fund manager coming in there for finance. And the thing is like, if some of this falls through, I really think the VIX down here at $13, $14. I mean, on the daily chart, this is going all the way back to 2021 right now, holding some of these lows. I mean, we've been a little bit lower than where we are right now, around $12 or so. But again, the VIX is going to give you some cover. So if those of us that are basically 95% invested in the market right now, you can put that 5% into the VIX. And actually, if the market does spike and get a little carried away, what you can wind up doing is getting some of that capital out of the VIX once the market spikes. And then, of course, it will be spiking to the downside. And then your VIX would go up there with the volatility. Then you cash out of that and then buy some of the depressed assets on the downside. So I think everybody right now, I'm actually going to be considering putting this on myself, getting some VIX going on there. So look at volatility right now is something that I'm considering.
Yeah, that's Sean, I love that. I think you buy 1250 all day long as well. If it does get down there, I love that idea though. Guys, we got a couple of super chats. I want to get to them real quick. First one is from Darren 499. The show is next level. Sharif, put the guns away, bro. You'll get demonetized. So shout out to Darren. And then Adrian with a 50 RON. I'm not sure which currency that is, but Adrian. Guys, what do you think about Micron for a swing long? Is it a good buy here, or 85, 86 level better?
I haven't looked at Micron today.
Look.
Look, you know what? I just pulled it up, and we've been talking about the theme of things that are just trying to get back upside and maybe riding the wave. You're not buying at the highs. It's things that are trying to catch up a little bit. Yeah, ultimately you've got a double bottom locally at 85. So I see what you're getting at there. But Micron needs to get back above the 100. Like it's underneath the higher low support at that $100 level. So as long as it's down there, I suppose playing off 85 would make sense. But Micron's it's a solid name. I don't prefer them. I feel like AMD breaking out of its channel is going to do a bigger move than Micron, personally. That said, you're risking to 85 and makes sense. I need to see this one climb back above 100. But even space here, you could just take a break of the channel at 115. It wouldn't be top of the list for me. I do like that support at the $85 level. I'd love to see it doing more on a day like today. I think it's a little bit disappointing to see it not back and testing the $100 level, given where we're at with some of the other chip names, unfortunately. Generally speaking, I do still like them in the long term, but there's a host of names I like better buying on weak charts. ASML was an example that we were talking about earlier. Yeah, it's not top of the list for me. Sorry.
Go ahead.
Yeah. Just to add on to Neil's point with MU, I think there's a lot better choices to choose from, a lot better stocks. But if you are looking to get into this, I like how you mentioned a lower price target. I don't know what kind of size you're looking to allocate, but that's when selling puts cash. So you wait for that underlying asset to come into the price that you're looking to get in, opposed to just jumping in on market or whatever it may be. You can sell some cash secured puts, wait for that price target that you specifically want, be a lot more accurate, while you can collect some premiums on the side too. So that would be my look on it.
And to be quite honest, like if I could just give my personal opinion about the technicals right now on Micron, it does look like it is in an accumulation pattern or a distribution. Hard to tell. But of decision holding, you can make the argument for an 80 range, $110 top, give or take. So your idea about picking it up towards the 80s and low 90s, not a bad idea. Build your position up in the lower end of the range if that's your thesis. If you like it, you think it continues to benefit from the AI, right? Yeah, build it up. And one other thing I want to say, and we don't talk a lot about emerging markets, but let's call a spade a spade. Micron has a major competitor in SK Hynix out in South Korea, and they do trade on the I believe the Kospi. So if you're able to buy foreign stocks and you like the name, and we know Nvidia speaks very highly about SK Hynix. I personally can on my brokerage. I have access markets. I don't think that's anything novel. I think a lot of people do. So SK Hynix, another one I'd be keeping my eye.
All right, good stuff. Let's keep from the top podcast. Question for all: what do you think will happen if the market, or to the markets, if Trump starts drilling for oil in the U.S.? Sharif, you and I have talked about that.
Yeah, sorry, Brendo. So,
how's that orange?
It's good. It's good. Here's the thing, and this is kind of what I don't get, and I want to get some more feedback from you guys. Why haven't we had a breakout trade in any of the oil names? We looked a little bit, Joe and I, during the midday show, I believe earlier this week. We didn't see anything. We saw Oxy holding 50, but there was no breakout on any of these names. Unlike the crypto trade that we've had, we anticipate Donald Trump going to be pro crypto. Crypto started moving. So I don't get why energy is stuck in this range. So I'm really hesitant to want to build anything in because the technicals aren't supporting it. I don't know how the boys feel about that.
Well, it could be like maybe this is something to do with the fact that energy has been trading for a long while on what's going on in the Middle East, and that could just be a bigger picture. I don't know. Like I look, and I say this as somebody who recently didn't buy again on Chevron. Like that's something that I did add to recently, and I am disappointed in the lack of movement there. I would argue I'm interested to hear what Randy would say about his XOM, but Chevron has been unable to break out of a channel. Like the support's been graded at 140, and it's just been unable to break out of the channel and break out the 170 to get back into some highs. It could be geopolitical. The ceasefire is happening. And I think ultimately, like maybe that could be what's weighing on it. It's a big I don't know, but I still very much like Chevron, and I do think it is headed for a move higher. And I think ultimately, you can think all you want about fundamentally what should be happening to it, but truth of the matter is, when the run's not done in tech, and you're seeing it again here today, sometimes that money is just not flowing the way it normally would over into energy. So I think it's a little bit disappointing of a move. It's not dissuading me. I think I have Chevron for balance anyways, but you get a little bit of FOMO when I see something like that, where I'm just not getting the return that I expected from it. And I think should be a bigger move. I expected it to be at $180, $190 right now, CVX, especially after the whole morning. It's just not happening. It could be a geopolitical thing, and maybe that's what's weighing on it, because everyone expected that he's going to drill. I think that's pretty much a given.
Nice background there, Katina, man.
Thanks, man. Trying to damn thing over here.
Yeah.
We got a little bullish action.
Hey.
XLE's up. I mean, XLE's up 13% year to date with a 3.3% dividend. So I mean, there are, and that has Chevron and all that in there too. So I think that's not bad. I mean, it's gonna, it's gonna be, sort of, when you're looking at the NASDAQ and, up 20 whatever percent it is now, 24% for the year, it's not gonna be as nice. But you add that dividend yield in there, plus a little bit of love down there for XLE. So I think it's getting close. I mean, there's always gonna be a little bit of hatred for old energy And I think that as we talk about solar, I mean, look what's happening with that TAN ETF. You see uranium moving around today. So there's always going to be alternatives that are going to be discussed, right? Especially when you get a new administration in there. People are going to have to try to figure out what exactly the next move is. And look, I mean, all those factories are still being run on oil, gas, plastics. I mean, you're not making plastics with solar energy, right? So you got to figure this all out. I think there still is a market for, especially some of these service providers. You're looking at Valero, looking at something where you're trying to refine oil. I think there's some plays there as well. So not gas, I think, is a problem. We've talked about that. Never seems to really get going.
That's terrible.
As far as just straight USO, I like it, and I think you can. FXI right now is still down that 1%. I'm just looking at our board right here. If everybody just looks online, I mean, TAN right there up 1.4%, uranium up 3%, Nasdaq up 0.9% right now, and still everything running, man. Retail's up today again, and it's holding fort, man. 0.5% of the time, 65% of the time, all these markets are up on Black Friday. So it looks like
by the way,
no deals to be had.
MSTR is losing the bid again. That stock.
Losing the bid?
Yeah, like it's MSTR pullback. There was a pullback in MAR as well. I mean, Bitcoin did pull back from.
Oh, look, we have Raider Trader in the building.
Raider in the house. What up, brother?
Yo, what's he saying? We're cooking the markets from home. Huge announcement. Oh, no. Oh, yeah, this is what he's talking about, the TNX. Okay, so yields have now crossed. Everybody's part of our chat right here. You can go ahead and read that right now. Below that 4.2%. So this is where we're buying TLT, according to Mr. A Raider. So if you are online here, Andrew, we'll have you on maybe next week, Brendo. We'll organize this and have him on.
For sure.
Explain this position to everybody. Another $100 would help you on the air as well there, Andrew. Just playing around. But thanks for that, and thanks for pointing that out to everybody.
I like
Mr. Raider Trader in the building. All right, we got more questions to go through, guys. They're coming fast and furious. Good morning, guys. I'm on pace for my first green year as a trader. This is from Hector Castillo. Back when you guys were going through the same milestone, how did you guys break through, and how did you continue leveling up? First of all, congratulations, Hector Castillo.
Yeah, I'll jump in if I may. I mean, I come at this from an experience or from a different level of experience. Obviously, I've been trading a lot less, and I went live earlier this year. But as someone who just had my second green month, which is, of course, on a smaller scale, I want to congratulate you, Hector Castillo. And second, I think, I guess just clearly something worked very good. Your first green year, that's awesome. I would say just kind of where I had my first green month in October. For one, I was taking a lot less trades, and I was trading basically exclusively spready stocks, the stocks within that had A+ setups within, I guess, my niche, my OOV. So I guess whatever works for you that got you to that first green year, I stick with that and just keep persevering. Like if you've done it once, you can't do it again. Just stick to, I guess, repeating and trying to adapt and build on the skills that already got you there. And again, congratulations.
Yeah, big congratulations for sure. I can tell you, just if you go back to what Darius was talking about from the start, I graduated trading small caps, but it was specifically at the time, penny stocks that I was making more on. And so the month after, the first thing I did is I tripled, I essentially tripled my risk on the penny stocks in particular. And I think if you look to something like today, recently, the best trades for myself have been ups coming out, where you get a nice consolidation break on the Teslas of the world or the Nvidias of the world, and then these mean reversion plays. I think just trying to only leverage in things that are working the best, but that down to actually trades in that granular of a fashion, understanding which are working the best and which ones maybe you're taking a little bit of a hiatus. Because if you're not really paying attention to that and going through that on a day-to-day basis and separating different trading setup, ultimately that's what it works out to. And the ability to, hey, this setup is this setup. I get in here, I get out here. The technicals of the trade and how you execute it don't necessarily don't necessarily change. But sometimes that specific setup is working 8 out of 10, 9 out of 10, as opposed to 6 out of 10. And those are the moments where you want to make sure you're out in the wild looking for those ones in particular. Those are the ones too. And then having the ability, just because you're more or less risk on, to trap as it's supposed to. You know, like you can't be in a situation where, if you're, the whole point of scaling, you cannot scale a strategy if somehow you're going to suddenly be trading it differently from the way that's worked for you in the past. Because if you made money by trading a setup, specifically, this is my entry point, this is my exit plan, when you go to scale up, you can't be changing that, because now you're not doing what worked for you in the past.
Yeah, very well said.
I just want to mention quickly some of the action that we're seeing right now, guys. NVIDIA looking at like it's curling back into that high 139 and a quarter. There was a whole lot of selling. I didn't have a look at the book, but you can later reflect it on the chart. A lot of selling at 139 and a third. Let's see. I want to see if we can break that. Then we were obviously looking at squeezing into that 140 area. So good look there. Let's have a look at some of the other names that we've been looking at. The Q still hanging out at highs, guys. I saw Dan the Dang Man Emmons after a while, and he was saying look south possibly here on the NQs. We're definitely putting in a lower high. We're on 8,975, looking like we're hanging out at the 50s, but still a lot closer to the highs than we have been. To the lows, excuse me. And then the ES is kind of the same thing right now. Same look as Q, very much near the highs. Bitcoin is the one that's selling off a little bit, breaking below that 98,000 now. So coming down a little bit there. I don't know, 500, a little bit of an arch there.
Yeah, I think there's going to be a little bit of a pullback here. I was just saying we were at a key inflection point not too long ago. So I was looking to see if momentum could drive Bitcoin past that 100K level. As of right now, we are pulling back. The volume is slightly low, but I'm still confident. We're really early in the session today still, Sharif. So this pullback is totally relatively healthy. IBIT is currently holding VWAP to the penny right now. So I'm looking for still a potential bounce. Again, unfortunately, we do all the time, but I think we do hold this 97 as of right now. If we do decide to break, then we can potentially go lower. But as of right now, it looks like we're holding up relatively strong. So look for some continuation in Bitcoin, absolutely. So I'm keeping my eyes on that one today. I really like it. IBIT's only up about 1.5% on the session. But one thing that I did want to point out that is still relatively strong aside from the semis is Tesla. Tesla's still moving higher here, slightly pulling back, but we're up about 2.5% on the session. So we're going to look for some continuing strength, I think, in today's session, Sharif. So I think it's going to be a strong one. I think it's going to stay strong.
Actually, I just want to remind everybody, like I know it's only 10:30, but typically speaking, and we had talked about this in the pre-market before the market opened up, on a day like today, a lot of times that first initial move is your best trading opportunity. That's why we're kind of highlighting you had the reversal trade on SMCI, you had AMD and NVIDIA breaking back out, but at this point, we're only 2.5 hours away from the market closing. So like this is generally the moment, like around 10:30 on a half day, where you do get lunchtime trading really start to set in, like a little bit earlier. Like it's sometimes even as early as 10 o'clock. I think we're getting into that phase. You saw the pullback. So when you have strategies that for a lot of people, the pullback and like the VWAP hold, let's just say, that's something that you could look for. Or if a stock's been weak, you're looking for it to make a bottoming pattern in lunchtime. You start to think of that at this point on a half day, as opposed to 11:30, 12 o'clock, waiting for that time period. So I think we are into that at this point, because we are almost half done. I would argue from a volume standpoint today, we are already half done. And you want to keep that in mind. So I don't think you want to be sitting there over trading for sure. Like you want to be looking to maybe pick your spots if you're sitting in something that's holding profit. You can. It's one thing to hold on to profit, as I would think about where your profit takes, and be careful about getting into bigger positions at this time of the day. I just wanted to quickly say for Locks Bright in the chat, the market does close at 1 o'clock Eastern time today. It is a half day. And for those chips, they've been doing very well, but just be careful. You know, I think when I'm looking mixed leg and break at a consolidation high, I think I'd be less to be super optimistic about that. And certainly break, you're talking about smaller size. I don't like breakouts late. Like today, you've got to get that early. Don't get complacent about it, because there's no one forcing you in trades. You know, I think those early runs were fantastic. I'm not seeing anything that looks set up. Maybe some small caps. So whether we on days like today is you get a few more lessons of time that
Neil, this is not technically a small cap, but you know, when you look at the chart, kind of looks like it is rocket lap, guys. RKLB number one. The daily looks fantastic. The 5-minute chart is, you know, really respectable right now, holding the 10 exponential moving average on the 5. That 2750 seems to have some buyers. We seem to have a lot of bottoming till 27.5 looks like people they're caught in a bit of a range right now. 27.5 to the south side, obviously 28 to the top side. They're not having even got to 28, 27.96 HOD, but it looks like it is consolidating a range. I don't know if Derek can see this right now. RKLB kind of caught between 27.5 to 28, waiting for that breakout. But this has been a great looking chart, great looking trade, very bullish. In case you guys are wondering what these guys do, they are kind of a similar look to SpaceX. They're not obviously near the scale of SpaceX. They don't have as good as rockets, but they've got these neutron boosters. They have electron boosters that use different types of rocket technology. Seems to be a bit cheaper. The market loves it, as you can see on the daily there. So it's something to keep your eye on. 8.5% right now. Let me check the short float on this, see if some shorts got squeezed. RKLB. Let's find out what trade
it is 15% short float, I think, Sharif. 15% from what I'm seeing. Also, I just wanted to agree. I would give that the Derek Panera range endorsement. I just checked this out on the 3-minute, and it's looking pretty good. So yeah, shout out to that for sure. 15% short float for RKLB, which has like a 14 bill market.
It's beautiful. I mean, exactly, Derek. $13.9, $14 billion market cap. It's doing good volume for the day. 11.1 million. Average is 18.3, and we're less than an hour and 10 minutes now after the bell. So you know it's already doing big volume. So RKLB, guys, if you're interested in something, looking bullish right now, this is a good one, guys.
All right, guys, I want to get through more questions here. We got so many to touch on still, so let's keep going. This is from Adam L, and I think this is probably something we can all attest to or have an opinion on. Why would you day trade with a firm over day trading by yourself, given that you're a profitable trader? Lots of different angles I'm sure we can take on that, but Neil, why don't you lead things off?
Sorry, can you say that one more time?
He's essentially asking, what are the advantages of maybe trading at a firm, like a prop firm, versus trading on your own, general?
Okay, so I think the biggest advantage is when we talk about discipline, you have to be disciplined to be a trader, right? And there's two forms of discipline that are important, like external discipline and internal discipline. Now, as a trader, what internal discipline is going to mean is if I have a daily loss limit, if I have an area where I'm supposed to be getting out, I stop out at this level, I no longer take more shares. It's all well and good to have that plan, but it requires internal discipline when it gets to that price and I need to execute out. I'm supposed to get out of this trade at this point. I'm supposed to take profit here. I'm supposed to stop buying this stock past this level. You can have all of that, but you need to have that within yourself or build it within yourself consistently to start following that plan. And that's where internal discipline comes in. External discipline is when you have a risk manager on a floor or a risk system in place that is telling you or forcing you to stop out of that position, getting you out of that position, or discussing it with you and keeping you accountable to it. On a trading floor, you have that external discipline in a constant basis to help you build internal discipline. When you are trading by yourself, it's all on you. There is nobody telling you to forcing you to get out. If you decide to double down, no one's stopping you. If you decide to average in when you shouldn't, no one's stopping you. On a trading floor, your risk manager here at Real Trading could prohibit you from averaging into position. They could. Don't necessarily do that. You've got a daily loss limit that's going to be in play. You have a limited amount of buying power. Maybe on a specific stock, you've been allocated a share limit, although that is relatively rare. So I think one of the things that I found, and I can tell you this right now, it was a huge advantage for me. I was already a pretty disciplined person, but having risk managers who would see my strengths and weaknesses and try to make sure that we're always building on your strengths and trying to fix some of your weaknesses, that's a huge advantage. Now, it doesn't mean that you can't make it and develop internal discipline yourself. You certainly can. And for those that believe I'm just not a disciplined person, I don't have it in me, what I have found is certainly true of all people. Everybody in this world is incredibly disciplined when it comes to something. Like there's somewhere in your life that you do have a high level of discipline. Maybe it's not the places that traditionally matter. Like, oh, I don't clean my room. I don't go work out at the gym. But you might be disciplined somewhere else. I know some people, maybe you're a gamer and you sit at home, but you have a high level of discipline when you're developing that strategy. There is something in your life where you do probably have good internal discipline that I think you need to channel that and bring towards your trading. And oftentimes we get caught up with, oh, if you're not an organized person, if you don't have an organized desk or a clean room, or you're not hitting the gym 5 times a week, you're not a disciplined person. That's utter nonsense. There's some way you're disciplined. Just like everyone's passionate about something. Like there's a passion somewhere. There's discipline somewhere. Just find where it is for you and then channel that energy and where that discipline, how it manifests itself, channel that towards trading if you can, if you find that you don't have internal discipline. So I know that's a long-winded answer, but that's the biggest difference between trading on a prop floor and trading at home. We have the advantage of developing with external discipline. Like when I started out, and I can just to give you an idea. Like when I started out, and I was okay trading, and I was actually consistently profitable trading some of the bigger cap tech names. But I remember at the time, I wasn't getting over the hump. And Sean and the other manager at that time literally pulled me aside and said, "You know what? Based on the way that you're trading, you'll probably just make more money on small cap stocks." And it was just like looking at small cap traders and what they were doing and what my strengths and weaknesses were. I did it. Within the first week, I was making more money. It was instantaneous. That's a huge advantage because it's not a switch that I would have made on my own. And that's the advantage of a trading firm.
Yeah. Just to add on to Neil's point, because I couldn't agree anymore. And just speaking from personal experience, I traded on my own for years before joining you guys there on the floor. And that's where the psychological aspect gets in. It's all fun while you're trading at home, but having the ability to have more resources and more like-minded people being around you is really key to growth as well too. So trading at home, it can get lonely, and that can have a psychological effect on your trading as well too. So just to add on to that point, trading at home can get extremely lonely being there for 7.5 hours a day. But then the benefit of trading on the floor, you have the like-minded individuals, you have those extra resources, and you just have more of an objective throughout the day, opposed to just waking up, crawling out of bed, turning on your systems, and kind of just being isolated on your own. So I think that's a really big point as well too.
Joseph, if I can just make one quick comment, it's not about the prop firm, but SoundHound guys, big day today. Almost 14%, knocking on the door, $14, SOUN. The reason I wanted to mention this, because on the 25th, we rejected at 9. So this one does have a bit of a higher short float, 27.6% for SoundHound, trading at the day's high right now, $9. And there's big size There's about 50,000, maybe a bit more than 50,000 shares, not lots, shares. So got this bad boy set up at shares. So Soundhound trading at day's highs, rejected $9 back on the 25th. Obviously not suggesting anybody short at the highs over here, but yeah, possible reversal. Big day for it. 14.5 keeps going every time I talk. It's a little bit higher right now. So Soundhound moving.
Yeah.
All right, let's go back to the questions here, guys. I'll get you another one. This is from a long-term perspective. This is actually a really good question. So, and there's not going to be a right answer to this. Again, this is going to be more everyone's take. So this is from Ash. What is the rule of thumb for taking profit for long-term positions? We were talking earlier a little bit about Warren Buffett being at long-term, cash levels at this point, and it's hard, when the market's at all-time highs, some of your positions may be at all-time highs. It's really hard not to see that money and want to, take at least some off the table, which is fine. But so the question is, I have Palantir average cost at $10, sold 40% at 14 per share, and another 20% at $50 per share. Feel like I missed a lot. Sean? Sean is muted.
Mute here.
There you go.
Yeah. You did miss a lot. I mean, honestly, it's one of those things. Like, you're long at $10, you have a decent position. It goes to 14. That's a 40% gain. You take those, generally speaking. I mean, the stock market on average averages 13 to 14% per year if you're going to look at the S&P 500. So when you're taking shots on a name like a Palantir, I mean, again, if you bought at 10 and it never went against you, great. But it did go down to 7. It did dance around those levels. So what I think you always have to do is very similar to what we do here, everyday trading. And that is have a target in mind. And then when it's hit, your order gets filled, and then you just kind of move on from that. I think selling 40% on a move from Palantir, I think that's what your first target was. I think you got at a 40% or 60% or whatever it was there for that $4 move. That's probably a little too much, right? Because the thing about Palantir is relatively new name. Its birthday, it only IPO'd about 4 or 5 years ago there. It was a direct listing, right? So it did have business. It was 25 years in business before it even came to market, right? So sometimes I think if you're going to take a position in a Palantir, you have to think to yourself, okay, what am I looking long term and what are the possibilities? Because like, people got out of Tesla a long time ago. Nvidia was $44 a year ago today. I mean, when you're buying some of these names, there's going to be upside targets that are really going to blow your mind sometimes. And I think you want to always hold on to a little bit for this kind of a move. And it sounds like you're still in some, so congratulations on being still into something. If you're long at $10, man, it's a 6-bagger. I mean, that's we're talking about making some money, like great trade by Sharif there. Great trade on iBit as well. Try and take this up 10, 15%, right? You just made on that Palantir position, my friend, 600%. Right now, you're long at $10. It's at $60. A stock like Apple is not going to go 6x in 8 months, 9 months. So take the profit where it is. You can't always, catch these sort of huge moves. And sometimes they go against you, right? Like SMCI. Look where that came from. That came from 130 all the way down to $18 at its low. So sometimes you're not going to be right on all the stocks, but sometimes you are. So just great trade. And you did miss the boat. I mean, I talked about getting out of some of my positions there as well. And I think you just got to stick with it. It's trading at 300 times sales or something. I mean, you gotta watch out for some of these price metrics.
It's just like, it's perfect because also too, like, is it always separated? Is it an investment or is it a trade? Because I think if you're thinking about it as I want to own Palantir till my retirement, then I would argue in that case, getting out of 40% early, that doesn't necessarily make sense. But if you're just talking about capitalizing on a trade, there's absolutely, just nothing wrong with that. I think having some sort of a rule or developing a rule can make sense. Buffett's got his own rules. Sometimes I'll sell things only for the reason that it's become too much, like I'm just overweighted in it, and I'll trim 5 or 10% or something like that. But if it's a trade, then when you get into a trade, you should have some targets. And if you had that as a trade and 40% was a target and you followed your plan, absolutely nothing wrong with that, right? And I think that's one thing a lot of people do is they don't make the separation. They're like, well, I don't know if I'm trading it or investing in it. And then you get a little of this hindsight or FOMO later on. But if you define that this is a long-term investment play, it's a little bit easier to just completely ignore some of the moves. Like when I got into Lilly, and I was in Eli Lilly early, and when it was 2-3x, I'm like, I didn't care, because to me it was a long-term play, and trimming on it meant trimming 5 or 10% on the way up, which is the most that I ever did. But then I'll juxtapose that with Snowflake recently. That was it's a trade for me. It's not something that I wanted to hold forever. There's other stocks that I like better. So to me, now that it's made its move, I am already out of half of it because it was a trade. So I think as long as you separate those things, I think you're fine.
Neil, if I could also build on your position from a fundamentals perspective, I think Palantir is doing everything right. And here's what I mean. We know that they're a software company. They're on the AI side of things, but they're by no means restricting themselves into software only. They're making all the right partnerships. Case in point, L3 Harris. So my favorite social media platform, TikTok, it brings me up on all the news. L3 Harris is developing this technology to be able to identify anything that moves and anything that's organic. Sounds a little bit, sad, because obviously it's going to be used for war, but using that kind of technology and then overlaying that on the AI software that's actually able to execute on that, they're kind of they're not vertically integrated in that sense, but they're making all the right partnerships. So when you look at how their product can be expanded and the physical side, the actual manifestations of that, I think that's one of their biggest benefits, that they're making all the right partnerships, even though they're only on the software side of things. So I like Palantir. I don't have any skin in the game. Just want to make that very clear. But, whether or not they're valued highly or not, so what, man? Tesla there are a lot of these other names they're out of whack from a valuation perspective, but that isn't the focus when you're trending, when there's something's hot. You're not looking at valuation. That comes after the trend's been digested and getting that consolidative mode. When all the euphoria's dried up, then we start talking about valuations. Guys, SoundHound is continuing to go. It took 9. It took 9 quite decisively there. Now we're 9.15. So when SoundHound's going, it's making higher highs and higher lows. Where it ends up curling off here, I don't know, but it's very respectful of the 10 exponential moving average on the 1. It's extended from the 10 exponential on the 5. So it has me feeling like it might retrace here, but the breakout's still in full effect.
All right, I got a great question, guys, from our friend Mr. Westermeyer. Sometimes I will park cash in ETF short-term in bull markets that track the S&P. What are some of your favorites with no time decay? I'll throw my 2 cents. Anything with a Vanguard name at the front of it. Look for low fees. Look for something that's been established and around for a long time. S&P related ETFs, guys.
XLF. That's my pick. XLF. I think that's a great pick there.
Yeah, I mean, it's hard not to just look at the obvious ones. I very recently, and it was interesting because it had something to do with Randy's XOM. And then I've been Chevron person the entire time, and for the very first time, I actually decided to put something in XLE. Like when I sell something, I usually want to put the money to work right away. And if I don't have an individual stock, I tend to put the money in the general market. Like I'll be like a Qs or a SPY guy. But every now and then, instead, I'll throw it in an XLE, or I'll let's say like Eli Lilly. I didn't want to buy Eli Lilly at the current level, but I wanted to get some money in, that I would put it into like an XBI or something along those lines. But I tend to be very bland when it comes to those. I think obviously one of the ones, the only one actually, this is one of the only ones that I've been considering is that ARK Venture, because I do want SpaceX exposure.
Yes.
So I've been really considering that one because I want SpaceX exposure. And I don't really trust that DXYZ stock or ETF or whatever the heck they call it, the Destiny name. So I think the ARK Venture is an interesting one to put some money into, because I want to get some money in. I recently sold some CrowdStrike and I wanted to get some in. I might actually put that in.
Randy.
Yeah.
Randy, you there, brother?
I'm here, buddy.
You see Marquise Brownlee, MKHD's review of the Polestar 3?
I'm not.
Yeah,
Tell
you
me.
got to get on that. Check it
Tell
out.
me.
He's fair. He's objective. There's some criticisms. It's kind of pricey for my liking. I don't know how you're going to feel about this once you have a look. It's bigger. It's supposed to be kind of a mid-size crossover. The higher end trim, we're talking about high 60s, low 70s USD.
Yep.
He seemed to love it. Like he pooped on the Fisker. So this is kind of like a Fisker competitor. And he was like all aces about this. I don't know how you feel about that, but yeah, I just wanted to mention that to you. The Polestar 3 looking at making waves.
You know how I feel about Polestars. I like the design. I like their quality. I like their build. Yes, there's Volvo-ish. They're going to build Polestars in South Korea and potentially, in North America over time to get around the tariffs. So there's upside here. Do you see a lot of them on the road? I've seen quite a few up here. Do they have, the market penetration that Tesla does? No. Their software, I don't think, is as strong as perhaps a Rivian or obviously a Tesla. I think there's upside here. They're maneuvering to get around the tariffs and to get around, the market penetration, especially in North America, is going to be their key upside feature here. Europe, I think, is an easier play. We have more content in Europe, more potential buyers. Volvo's a well-known name. The upside in North America is their biggest issue. I think they've got to have a real solid plan here, and if they can do that, and they could sell the vehicles, okay, they're a little bit pricey. Do you think they're overpriced?
I think that the 3 is overpriced, but
okay,
when you're talking about the 2s, that's what people are in love with them for. You're paying $350 bi-weekly in Canada. God knows what it is down south, because if we're paying $350 here, and we know we get rinsed on everything, right?
Yes.
So they've got a price point that it's hard to match. Even though I don't like the car, I'm gonna tell you the truth, I don't like it. It's too compact for me, and it's too European for me. That's not my look. But the fact of the matter is, there's a ton of them on the road.
Yes. I mean, fair point. I mean, price is going to be the bigger point here. At some point, if we end up with a lot of the Chinese manufacturers coming into the North American space, I would give it maybe 2-3 years, and the tariffs play out the way they do. We're going to find a lot of auto manufacturers struggling. You may not be able to buy the car you want at the price you want. So now you've upset the market to the point where, if you've got 40 or 50,000 as opposed to maybe 60 or 70 to spend, and you can't get the full size or the larger model that Sharif wants to buy because the 3 is too compact, what do you choose? What's on the market? You don't want a Tesla. So having that selection, having that market shopping list out there. I mean, honestly, when you look at the EVs that are out there today versus the ICE cars, we don't have a lot to choose from. We don't. There are the big EV manufacturers. We see a lot of hybrids. We don't see the selection of EVs yet. Are they coming? Of course they are. The Chinese, because they are able to undercut, because they're able to reduce their supply chain costs, now it's a matter of sales. A lot of people don't trust the manufacturers. There's no brand value there. These are hurdles they have to overcome. I think in Polestar's position, again, they're not as strong as Rivian on the software side, but the vehicles themselves are well built. I've seen one up close. Sat in one at the auto show, did not drive it. I think they're fantastic. I think they will have a broader appeal as a global platform. And again, if they're built in South Korea or eventually in North America, then we get around the tariffs. There's upside here. Is the upside as big as Rivian? No. So I think they've got a ways to go yet. I think there's a lot of traction they need to find in order to get these newer models that are in the pipeline off the ground. How long that's going to take, we know that time is not on their side sometimes. I mean, we looked at, you mentioned Fisker. This is a tough go. This is a real tough go, and the Chinese are not making it easier. So time is something they have to figure out. They really have to have a solid game plan, and sales have to get out the door. As far as production goes, labor costs in South Korea are more expensive than in obviously mainland China. That's a hurdle, but compared to building cars in the U.S. or elsewhere, that's certainly a leg up. Tariffs, we've got a lot coming in the new year with the new administration. We'll see how this plays out.
Brendo,
Sharif,
gun to head or weapon to head, with price being no option, with no hurdle. Which EV are you going for?
Pure EV?
Pure EV, Brendo.
Have to buy one?
Gotta.
On the head, man.
Wow. We're gonna take him shopping.
You know what? I mean, we've talked about it before, but the Silverado EV, the pickup truck, I mean, the range on that thing is better than anything I've seen. I think the history as far as Chevrolet making trucks is concerned will translate into maybe potentially some quality from that standpoint. I'd probably go that direction.
You're a pickup guy? I didn't know that.
Learn something every day, Randy.
Learn something every day.
No, I mean Rivian's the R1T. I saw an R1S yesterday. It's actually a lot nicer than I thought it would be. But the R1T, it's a little small. I mean, for the city, sure, it's fine. But when you actually stand beside it, and I mean, the bed is, I don't even think you could put like a mountain bike or something standing up. It's pretty short, the actual bed of the truck. So from a utility standpoint, something like that, I think.
Interesting. Yeah, I mean, the big three have a play to make. They have to get, and their biggest selling products are pickups. You know, Ford lives on their pickups. Ford stock is entirely made on pickup trucks. So they have to get a product out the door that's going to solve range anxiety. But as Brendan said, still has the utility, still has that 8-foot bed, still has the comfort, the convenience, and the range that people expect. And are we there yet? Maybe not quite. You know, if you've got a 40-gallon tank in your F-250, you can certainly get more range on that than you will on any EV pickup that's out there today. Stellantis has a Ram out with a range extender. It's going to be shipping in volume shortly, and they're talking, you know, upwards of 800-900 miles with the range extender. Yes, it's considered still hybrid, but that's fantastic. That's a great product to help people transition to the pure EV space. So if Brendan's going to go buy a pickup, we'll have to go for a test drive.
Mm-hmm. Guys, just quickly, UMAC is breaking out.
Yeah,
here.
Joseph.
Halted. Yeah, we're up. It's halted now. We're up about 68% on the session. The volume stepped in, and now we're halting on UMAC, guys. So keep an eye on it.
All right, so let's give them the details.
I mentioned that to you first thing in the morning, Sharif, with UMAC.
You did. Yeah. Joseph, it's $138 million market cap, so it is definitely a small cap gapper. Let's talk about the details on this bad boy. It's got a 3.3 million share float, so definitely on the smaller side. Let's check out what Trade Ideas has to say about the short float. Negligible short float, guys. 0.6% of the 3.5 is board for short, and so that could be 2 weeks old. So not sure if that's continuing to be accurate, but this thing has been absolutely exploding on the daily. It caught wind. It looks like it's an election play possibly here. Really started getting going after the election, with the real volume, though, coming in on the 27th. So that was the day. That was Wednesday. We had a monster day on Wednesday. We didn't close at the highs. We ended up weaseling below that $10, but that $10 level looks like a distant dream now, because we're at 16 2/3 halted to the upside. It's up 68.5%. Let's talk about what this company does, in case you're wondering why are we even mentioning this. Unusual Machines is the name of this monster. They manufacture drones, components, and drones. So we all know that's hot. Guys, you know, I love TikTok. I love TikTok for multiple reasons, but it shows me what is happening on the war front in Europe in a way that I don't see anywhere else. Not Facebook, not Instagram, not even sometimes X, to be fair. But Twitter shows me, and it's drone focused. These soldiers are hiding for their lives from these drones, and they're developing all these evasion tactics. So drones is what I'm focusing on right now. And I think any of these counter drone measures, anything drone related, that's where the future is, guys.
Drone superiority is where it's at in modern warfare. That's just, it is what it is. And you can,
here's what it is,
you know, you can not like, and again, I mean, I think Sean already said this multiple times with regards to Palantir. Like you can not want something to be true from a let's make the world a better place standpoint, but at the end of the day, you know, conflict is still happening, and you've got to look technologically where the most consistent spending is going to be. And you know, the spending won't stop in the short run in AI, the spending is not going to stop drone technology. And I think when you guys were talking about, or when we were talking about eVTOL as well, like that's another area in which I think is more important, because that's what I was sort of saying. I don't think for eVTOL, but I don't think it's that important for those to make it to mass consumer market. I think it's important for delivery. It's probably more important also for military applications as well. So it's another place that they can win. So this name again, catch the wind. There was literally, a few headlines where you have to keep your ear to the ground, and anytime there is any kind of a drone headline, this thing is going to rapidly move. Like, I know we're all excited about it, and we talked about this as a possibility for a day like today where these runners can go. There's a lot of headline risk with that. I think be very careful. We only have 2 hours to go in the session, and if you get trapped in something like this, late in the day in a pullback, there's nothing wrong with taking a little bit of profit. But days like today with lighter volume, these are the types of runners that can go and they get the right headline, and I think they're fine. I mean, long term, I like the idea. I don't know how much this play works at these prices. Fundamentally, I have absolutely no clue. I feel better about like the SMRs of the world than I do with that drone play.
Neil, I want to build on your point one quick sec. The OG Darwin in the chat was saying that quantum computing is actually important for drones because it helps with the encryption. So to build on what Darwin was saying, so guys, what's happening is you're getting these electronic warfare jamming that's jamming some of the drones, bringing them down, or they're able to take them over. So encryption obviously helps with that. And we know that quantum computing is going to change encryption in a fundamentally different way that we haven't experienced before. But I also want to tell you guys that the Russians, I know this is kind of deviating, but we're all freestyling here. The Russians are using these drones, Neil, that have fiber optic cables connected to them. They're like several miles long. So you can't jam these instruments, or because they're fiber optic, they're direct connects. They're not using wireless signal. So to every move, there's always a response and an evasion and stuff like that. Yeah, exactly.
Well, yeah, but I don't think that takes away from the importance of quantum.
No,
quantum
certainly
computing.
not.
Like that is. We always talk about what's the next arms race, and I'm putting air quotes around it because obviously not everything is about the military and about war. But when AI is a big race, quantum computing is just as important, if not more important, race. And I think certainly that rotation feels like it's next. I actually am looking to see which one of these I want to get into. I'm not certain. Like, I think you pick one and rip, and I think SMR was something that we had talked about when it was at that 13 level. But maybe you guys can throw in the chat, like throw some names in there, because I know I'm interested in finding a pure quantum play. And obviously, everyone's going to be involved. But at the end of the day, one of the things that is certainly true is when the AI names start to slow down, which I'm not saying they're done yet, when they start to slow down, money looks to go elsewhere. We've already seen it happen with nuclear and quantum. I think that is a theme that, even if there are healthy pullbacks, is going to continue. And it might not be the big rocket ship in the next year, but it's certainly something that I want to be involved in, because for every nation in the world, is going to be involved in that arms race.
No question about it. Guys, Apple took out the top. Apple's really going here.
Let's
236 and a third right now. HOD on the dead one. Apple took out that 236. Simultaneously, UMAC unhalted, popped up into 1790. New high day, obviously continuing there. Still whiffling and waffling below the halt level right now at about 16 and a half, 1640. So it's certainly in play. I'm keeping my eye on 15, guys. 15 is an interesting level for me. There was some resistance there initially on UMAC is the ticker we're talking about. A couple of topping tail candles into 15 that sold off. We dropped down to about 13 and change before we ended up taking 15. So if we drop at this level, I'm looking at 15.
Yeah, totally.
Yeah, overall the market day highs here too, guys.
Yeah.
I was gonna say all-time highs too on the SPY as well too, guys. So that's a good look there. We officially broke the highs from earlier in the week, that is, and now we're trading around $602 on the SPY, up only about 0.5% on the session, though, guys.
All right, let's grab another question here. This is going to small cap land. El Sol with this question. I know the show is all about day trading, but any suggestions on some cheap slash small cap stocks that I can invest in now and hold for 4 to 6 months for chunky returns. Small cap ideas. Not everyone at once.
Yeah, yeah. Although I thought we thought that
Well-
the small cap king was gonna, but we'll let Neil start off.
No,
He disappeared.
I didn't necessarily have a specific name in mind, but I actually like these quantum names. I saw a few people put in that that QBTS. The QBT is going to be in there. I think those are the problem is the 4 to 6 month thing. Like I think I like the move that's happening a little bit more in SoFi because I think it's a more real right now. But I do like the quantum names to a certain extent. I wish I was like I haven't looked at those charts nearly enough. But I think that's a place that I would be looking, at least if I wanted some runners. Just unfortunately, like I haven't done enough work with them, to be honest with you. And we got to be honest about that. Like I was just asking in the chat specifically, hey, what are some of the quantum names? Which are the ones should we be looking at? I think that's a good space.
Yeah, I was gonna say also some quantum names, because what you're looking for is things that could start to catch a little bit of fire, right? Maybe some energy names, that have been potentially beat up a little bit there. You know what? Another sector. I mean, I don't know if it's going to step into favor again, but that MSOS, like some of these marijuana ETF there, I mean, it has gotten hit a lot to the downside. I don't know if I'd invest in individual names, but some of those levels that MSOS is coming up to, I think there could be some good pops there. And honestly, I know you're looking for some small caps to really make a run, but something that I think can get going and could be a double, and it doesn't take that much, is the VIX. Like I really think that you get a little bit of a movement one way here in the market, and obviously it would have to be a downside play. But if something cracks anywhere in geopolitical, anything like that, like Russia gave a little bit of a scare the other day with their nuclear plan there. I don't think that we're going to get that kind of a dramatic move, but the VIX down there at that $13 mark. I mean, Brendan mentioned 1250. And I know I talked about this an hour and a half ago, and I know it's an ETF and it's not a small cap name, but I think it could double. Like you just get one little spike on there, and people are going to be running for the gates on some of these names, and we could see some money coming out of that Nvidia again. I mean, there's a little bit of money still to come out. I mean, Tesla's had a huge move to the upside. I don't think there's anything wrong with these companies, but again, if the market's getting heated, which it is, we're at all-time highs, you may want to look to take away some of the risk by basically not going into cash, putting your money into the VIX and buying some volatility at these levels. I think that's a decent spot there if you didn't want to. The problem with small cap names is they are hit or miss on some of those levels. So I would just rather trade an ETF that has a chance of going, and I think that could be the VIX.
Yeah, actually, just to that point, because I mean, obviously, being in something which is a little bit more, I think, stable, makes some sense. But like, if you're in any of those quantum names early stage, that's the kind of play that you put on because you're okay with losing 50% of your money. And I think it's always important to say that, because if I say, hey, I'm looking to buy, I'll just say like Snowflake, or I'm looking to add to like Meta here, you're not probably going to in the short term going to get rinsed 50%. I mean, anything can happen. SMCI happened, but it's just not going to happen. So understand that when you're talking about, if you want those big, massive returns, the other side of that coin is you should be okay with losing 40-50% if you're trying to get a double or a triple up in a short period of time. It's like, what can be that next wave? The difference is what I think what Sean's saying with the VIX is, like, it's at a level where it's the chances of it losing you much of anything is relatively low because it's at a good support level. But at the same time, you get any kind of a black swan, and we've seen VIX 30 before. So like, it provides you with a unique opportunity if you think that we're at a point where there's a lot of potential, I guess, black swans that can come in. It does give you a 2-for-1 opportunity, technically, without the same downside, which you flat out do not get from small caps. But again, the small cap could go 10x as well. Just understand the fundamental difference in terms of support.
I was just reading, guys, what about retail here? I was just reading an interesting note. This was out earlier this morning, but from Adobe Analytics, consumers spent a record $6.1 billion online on Thanksgiving. That's up 8% year over year. XRT is not really doing anything today, but retailers, I mean, we touched on a few already.
Yeah, I mean, it doesn't surprise me that when everyone's trying to like grit their teeth and watch the horrible Cowboys win a game, that you might do some online purchasing because the football plays was absolutely terrible. But that said, one of the as long as the labor market doesn't fall apart, the U.S. consumer has been doing, I'd say, relatively well. And we've seen Walmart's quarter, how incredibly strong that has been. I would say disappointment with Target. I mean, ultimately, like you'd like to see that discretionary side get a little bit better because I think that would be that's what everyone's trying to catch what's the one that's going to rally that needs to go that hasn't gone already. And I would tend to think when you look at Target, like technically, like it's got this really, really good potential breakout that everyone's chasing. It's just a matter of, okay, yeah, if it gets past this 33, 34 range, you have a sizable gap fill that it can put in for Target. But on the juxtapose, I think that's the kind of thing I'd rather trade a Target than own it because I know which one I want to own. And if I own a second retail name, it's 100% going to be Costco and not any. It's just Walmart and Costco for me. Well, Amazon counts too, but I put that in tech basket. But yeah, I think as a recent trade, Target made a bounce. They did dip off of the earnings. You have a gap that can fill in here for them. It's 133 area that's trying to go. If it gets a couple of closes above there, it's got a decent rally that it can make. But I don't necessarily love it as much in the long term.
All right, great. Let's continue along here. Again, anyone with questions, guys, throw them in the chat. Bears versus Bulls, we'll grab those and get them to us as we head through the 11 o'clock hour here, almost 11:30 already. Wow. Where's a good one here? Can retail clients ever be allowed to submit orders in tenths or hundreds of 1 cent? I see these value on TD Ameritrade's TOS routinely. Can retail clients ever be allowed to submit orders in tenths or 100ths of 1 cent?
Well,
I thought a lot of brokers right now are
anything sub $1.
If it's under
I thought you could
$1,
buy fractional. I thought you could buy fractional shares right now, right? So I mean, if you could buy fractional shares,
so yeah.
Yeah, so I would think that you could buy like 0.11, for example, of Tesla or whatever. I think you could probably do something like that. Is that what the question's about, Brendan? Or
I'm wondering if it's even decimal places like on stocks, like the way it used to be, instead of
right.
or maybe the way stocks are trading, instead of each penny, maybe even like fractional pennies.
Well, you can only do that on stocks under $1 to begin with.
But Neil, sometimes we see midpoint prints, right? Coming in on time and sales.
Okay, so yeah, we have access to there's bats and there's a few gateways that actually have dedicated midpoint. ARC is an example of them. We have access to those, and I would suspect that many brokers do. I mean, they matter more on the cheaper stocks. Like you'll probably you care about that when you're trading like a NEO, like a $5 stock. It's going to matter because if you're taking an 8-cent move when it's got a 15-cent range, you actually might care that on the way in you get the half point instead of paying the full twice, because then all of a sudden, like instead of on an 8-cent move you making 7 cents, you could make 8 because you're getting that midpoint print. So I would suspect a lot of brokers do have that availability. There is some discussion on a market wide level of testing out going to the half penny increments ticks on even like bigger cap names. That's already being discussed. We were on a call recently with a very knowledgeable person within the markets who did say that that's not as big of a deal as you might think it is, because they would change the fee structure would change for adding and removing liquidity in such a way that would make it moot that you'd be trading every half cent, because it would just work out to the same thing. Like the rebate structure would just change in a way that makes it almost a bit of a wash. I tend to think that those types of market changes don't affect trading as much as people think they do. Like it just adjusts the way you might execute, but it doesn't fundamentally change too much. But yeah, I mean, anything that we have access to in terms of midpoints, eventually that's the kind of thing that does bleed its way down the pole.
All right, let's grab a few more questions here as we continue along. This is actually a really good question. I like this. Are there some people, again, this is going back to the trading psychology side of things, are there some people that could never be a good trader, i.e. not built for it? For instance, not everyone can be a chess master or professional basketball player. I mean, not everyone's 7 feet tall, but I like the chess angle in this one. Again, are there certain people that shouldn't, try this?
Yeah, I'll touch on that quickly. I think if you're in it to make a quick buck, just totally avoid it, because I think a lot of us can agree to that this is not the game in order to do so. You're better off gambling, and you don't want to look at it from that type of perspective. It does take a lot of time, a lot of seat time to become consistent within trading. But if you're looking to make a quick dollar, this is not the gig for you. You do have to put in that work. You do have to collect a lot of that data. So yeah, I would just say if you're looking to come in and say, oh, within a couple of months, I want to 3x, 4x my capital, then you have a higher chance of losing that capital than 3x and going that 3x, 4x on that. So don't come into this game thinking that you're in it to make a quick buck. That's my sense on that. So
that's perfectly said. I mean, but in terms of there being this, when you use the example of like chess master or basketball, like from a fundamental standpoint, like if you don't have a certain level of athleticism or height, you're not playing professional basketball. If you don't have like a certain cognitive ability, you're not going to be a chess master. In terms if you take and remember, most traders fail, right? So right from the get-go, you're talking about a small percentage of the population that would succeed anyways. But if you're looking at the subset of successful traders and trying to rule them out based on certain attributes, when I look at successful traders over like my 20 years, the ones that have had careers, it's a very wide range. Like I know one of the better traders on the floor that we're on of all time, like the guy was high school education, sharp dude. But what mattered most about him is, like Joe Shet said, he wasn't in it for a quick buck. Like that dude, I remember he graduated and it took him a year to graduate. And in his next year, at one point, he was tending bar at nights to make it work. Like he was in it for the long haul, and he had the right mentality, but he had a passion for it. He was a hard worker, and he was unafraid to try new things. Like it was like he had a lot of attributes that worked for him, but it's not like being a chess master where you need to be a rocket scientist. There are traders that I've seen on the trading floor that would whoop my butt in a chess match and are certainly put an IQ test on them and whoop my ass. But at the end of the day, it's not only about that. It obviously helps, and there's a certain, like, I suppose, threshold that you would have to be above to be able to understand, buying, selling, level 2 pattern recognition. But yeah, it's not exclusivatory in the same way, I would say, as being a chess master. It's more like, do you have the right mentality, passion for it, patience? If you have those things going for you and a willingness to learn, then that subset of people who do eventually make it can be quite wide in terms of their attributes.
Neil, can I just mention a couple of things over here before we continue, guys? The big moves right now on Mara, it's taking $30. So Mara's really squeezing here. It's up big on the day. It's up 11 2/3. So that's number one. UMAC is nonstop. It's now almost up 100%. It looks like it might work into $20. We were talking about this one at the halt level of 1660. UMAC is the one I'm talking about. And lastly, Brendo, I don't know if you had an opportunity to see the super chat that came in from Rohit Sharma. Does Trader TV have any plans to start including swing trade suggestions alongside the day trades you currently offer? We've got a new partnership coming up.
I mean, we have a couple of things. Thanks for the question. Thanks for the super chat, first of all. But yes, absolutely. I love the idea. I think from a general standpoint, the way people are interacting with the market on a daily basis has changed and has shifted, and there's a wider range of the way people are interacting with the market over any given period of time. So the answer to that, yes, and please feel free to reach out at any time. Anyone really who's watching right now, guys, with suggestions, we love them all the time. Marketing at tradertv.live. Marketing at tradertv.live is the email address. Send your suggestions there. We would absolutely love to hear them. But yeah, thank you, Rohit Sharma, for that great one. There was one on Baba here I wanted to get to as well. A good question on Alibaba. I saw a headline this morning on Alibaba. Apparently, their AI outperformed ChatGPT's. I think it was 4.0, or it might have been 0.1. Wow. I think it was actually 0.1. But on a certain aspect of problem solving and processing. Yeah, it was actually 0.1 preview. So the question itself is Alibaba a good momentum buy crossing the 200 MA on the daily time frame?
Momentum buy.
Ooh.
So caveat, I own Baba, but I own it as a long-term play, and it was a better trade recently than it was a long-term play. The only thing I see for a momentum buy on Alibaba is it's attempting to break out a down channel since the when you had the China stimulus news, it made that move from like the low 80s and topped out around like 117 or so, and it's been in a clean downward trend with two phases. The second phase is when it got back and bounced above 100, and that trend is breaking now. So like it's trying to close above that trend line in the about 86, 87. It kind of needs to break out 87 and close above to do that. And from a technical standpoint, like if it breaks that trend, I think the move, at least short term, is back into that 100 level. The problem is this is not the first time that catalyst. It's not the first time that we've heard Chinese AI, whatever, beats ChatGPT in specified portion of whatever test it is. Like this, I've seen that headline with regards to Baidu. I've seen it with regards to Alibaba before as well. So I don't know necessarily if that's the catalyst. I think it's with these Chinese ADRs, this is the relief rally when they pulled back and filled the entire gap from the stimulus news. Now they're just all trying to bounce. And I think they bounced initially to the lower high. So I think, that it's that 100 area that I'd be eyeballing just from a technical standpoint. It's a classic mean reversion, like trend down trade. And it's also bouncing off a support level too. So there's that works with it. But I don't know. I stopped messing around with Alibaba, and I'm not just holding it in the long term. Like I'd rather say, okay, this is my shot in China, and I will come back and look at that one in 5 years, as opposed to trying to trade it, because I've never gotten out of it at the right times. And I keep saying that it's undervalued, but if it's undervalued, then why am I trying to trade it? I should just be trying to hold it.
And quick correction, guys, on that. Sorry, Sharif. Moment in time, not momentum. So is it right time, not momentum idea behind that? So should we buy it now versus momentum trade?
Well, that's what I was going to say on Sharif. And sorry, just for a second. I was going to say what momentum. The momentum in this thing is gone past the stimulus. This is not something that I would be looking to play from a momentum standpoint, because that has since fizzled out.
Yeah, so let's talk about where the technicals are looking right now. So there is possible support here. You've got a couple of good looks. Number one, you just slightly dip below the 200 exponential moving average on the daily. You're reclaiming it right now, though, above $87. That's number one. That's a good side. The other good side is you have an area crest that we put in May of this year, kind of very similar to the look that we're at right now. I know the wicks there going to $90, but both the closing prints are around 88. So you do have support here from a daily perspective. But in my humble opinion, the thing you really need to focus on right now is what Donald Trump, how he's going to look at China this time around. The second stint for Donald Trump. Is he going to have the same tune that he had with China last time? In other words, I mean, we hadn't seen aggression by the West in terms of trade protections and stuff until Donald Trump came first time around. Biden kind of continued that kind of look with China. He maintained the tariffs. He put export restrictions on a lot of these GPUs. So he continued the aggressive kind of stance with China. Does Donald Trump deviate from that this time around? Look, here's a little tidbit for you. Canada and Mexico are getting slapped with 25% tariffs. Well, how about China? 10% for China, but 25% for Canada and Mexico? Okay, Donald, are you singing a different tune here? What's going on? So I want to see how Donald Trump deals with this, because this all comes back to the fact that this is a political headwind for these ADRs. They are constantly under a political headwind, and unless they can, get some love from some of these Western leaders, I don't know. I think we continue to do this kind of depressed dance that they've been in for a hot minute. I don't know how the boys think about that.
Well, first off, I actually am pretty skeptical that we'll actually see those high tariffs for Canada and Mexico. Like we all know, it's like I play fantasy football. Okay, and there is some fantasy GMs who, when they come into your inbox, the first offer you get is going to be complete and utter nonsense, right? Like, you want Josh Allen, you want to give me a waiver wire guy, but that's not going to be the offer that you settle in with. So, I think a lot of that is talking big to be a starting point. Really, is Trump going to be more harsh on Canada and Mexico, maybe Mexico, than he would be on China? I don't necessarily think so. And on top of that, remember, I think he's adding 10% to current, which is also
mention that. Yeah, my mistake.
Which isn't nothing. Look, it's not nothing. I just think with not to get political or anything, but there's a consistency to the way in which Trump tends to negotiate and tends to speak out in the public about his plans. And I think from that, there's a reason why there wasn't an overwhelming reaction outside of currencies with anything in Canada. There wasn't. I remember when the day after that first tariff announcement came in with regards to China, my first thought was, oh, I'm going to sit down in the morning and tell Adair we got to be putting Target on the watch list if there was reaction. And Target was down like 0.5% and not doing anything. So I think the market's sort of woken up to this, that, hey, we're not going to overreact to that type of a headline anymore, because it's probably not going to be as harsh as he said, because it's just a negotiation starting point. And while there will be issues, it doesn't necessarily mean the end of the world. And that part of that comes from, hey, we had 4 years to be able to analyze and see the reactions to this tariff talk from before. So, ultimately, I'm not terribly worried about it, because we've been down that road before. That said, just to finish that Alibaba point, if you're trading Alibaba, understand, like, if you trade long term, whatever it might be, the headline risk on these is tremendous.
Oh, yeah.
I think anytime I pull up a 15-minute chart of a Chinese ADR, you begin to realize, when you look at that chart, that it's just a bunch of gapping from here to there. And the overnight gaps are, like, I don't want to put a percentage on it, because I haven't done that kind of work, but the overnight gaps are a huge percent of the movement on those Chinese ADRs. So when you're swing trading it, you're going back and forth and up and around, and the stability overnight is just non-existent. Like, you'll come in, they'll gap up one day and run, and you'll have a 6% winner on Alibaba. You wake up the next morning and you're flat on it. It's the kind of thing that doesn't happen as often when you're swinging in U.S. stocks. So just as long as you understand that risk, I think you're fine with it. But I try not to want to be trading those too much anymore. I just think they want to be investments. One quick point: we keep getting to, we keep busting 98 Dow on Bitcoin and then kind of losing it with some lower highs in here. So I know we have like 90 minutes to go into the session, but a lot of the things that have been making those strong runs and tops early on, they're not really getting any extension the second time through. So, when you're looking at what's it worth still being in, I mean, yeah, you look at that UMAC, that's certainly one, and then one that we completely got away from, SMCI. That actually, there's one trade that I regret that we didn't get to trade today. That went SSR, and it did a very typical early trend reversal, like it just from the open, trend down, broke trend, and it was clean. Like it was a clean higher low at 31.50 and a clean move to 33. And it double bottomed at 31.50. Like that was the, if there's a trade, I'm like, that's probably one that I would have made today, would have been the SSR bounce on SMCI. And it's got a pretty decent shot. I mean, it could get back and close above 33 even. So a bit of a rebound in that name. And again, when there isn't specific news and you see a stock crater like that, sometimes there's an opportunity. And it's when you can't find news on it that sometimes you just want to see if you can find an entry to pounce. You still need an entry plan. You can't just sit on the bid and hope. But that actually came in technically really nicely. I bet you there's a few traders on the floor that love the SSR bounce play. I promise you, that's the one that was a miss for an obvious setup.
Neil, can I mention one quick stock here? Guys, APLT, Applied Therapeutics, having a real tough day today. It's down 75%. This is a big move down. And here's the headline for this. They missed, so it looks like they're tanking as regulators said they were unable to greenlight a drug due to a rare genetic disease. This company was in a phase 3 trial with the FDA for classic glass. I'm not even going to try to say this. Okay, it was a condition that they were an ailment that they were trying to cure. It didn't work out. It's that's these bio stocks are kind of like lottery tickets. You either hit or miss on these ones. Down 74%. So keep your eye out on this one. There could be a bounce play or it could be more continuation to the downside. Thought I'd mention this one, guys. Oh, so APLT, big move down. Adara, how's your lunch?
It's good, thank you. Yeah, just eating. I got some chicken and waffle sandwich thing going on. So currently,
chicken and waffle.
You say chicken and
Oh
waffle?
yeah,
Nice.
I did, yeah. I've had chicken and waffle or some variant on the stream before, I think too. But yeah, so shout out to Egg Smart. Just got that coming through. Currently eating that. Yeah, that APLT was crazy this morning. It was actually on the watch list too, the Applied Therapeutics with regards to that FDA. Now here, sometimes those ones can get a bit of a bounce. So that's certainly something on watch there. You got like 25% insider owned too, so that's not insignificant there. But yeah, 250 mil market cap for APLT. Happy to be back with lunch with y'all. Yeah.
I'm hungry.
Now I'm just hungry. You can't tell me you're eating chicken and waffles. I've been sitting around here. I had a banana. I'm drinking some coffee right now, but I'm not throwing down like that. So there's I actually probably said this before. Like there's like if you ever want a reason, if you're in a place where they get like hurricanes and all that, whatever it might be, and if you want to know when you should get out of Dodge, if your local Waffle House is closed, you got to go straight up. The waffle, if you're in the U.S. and the Waffle House close to you is closed, leave. If you can leave, leave. They're always the only reason those suckers close is when there's like a natural disaster looming, and they'll stay open through whatever. And if you've never had chicken and waffles, I'm just gonna throw it out there. It's something that you definitely have to try. It is absolutely delicious. As a matter of fact, I'm going to push strongly for that to be on my menu this weekend. See if we can't figure that one out because see, I'm starving now. I wasn't hungry before, but now I'm looking out. Look, it's noon. I'm starving. You gotta be kidding.
Me too.
Good job, Adara. Good job. Let's get some more questions, guys. We have a few more to get through. MM would like to know the tap value on a halted stock without having to ask us for it. Oh. Is there a way for that? I mean, the best way, MM, is contact your broker and say, I want that. Make it happen quickly. Let's go to Ryan. Ryan has a question. Is there any trader that doesn't look at level 2 on their trades? Or is that our culture? So more of a question regarding purely chart-based trading versus entering orders, working a trade off of a level 2.
So I can tell you, like at real trading, when you're a day trader with access, like you do at real trading, the level 2 it's a standard part of your training when you get on the floor, and so like it's built in. So we won't know anybody that trades at real trading or was trained on this system of trading that wouldn't be looking at the level 2. I know people that have come from an only chart base, but when they get here, then you incorporate the level 2. That's just how it is. As a matter of fact, when I started trading, and this is no joke, when I was a trainee, your first week, or maybe it was even the first 2 weeks, you weren't even allowed to open a chart. You were when you first were exposed to a platform, it's like you've seen a chart before, but you haven't seen a level 2 before. At least back in my day, most people hadn't seen a level 2 before. You know, I'd maybe seen one on Quest Trade, but I'd never really traded off of one. So it's something that gets drilled in to utilize, or at least develop a skill set with. I do know traders that have come from, I only trade off the charts and don't even look at a level 2. And I've known some that are successful. When they get here, they incorporate it. Whether they use it heavily or not, they learn and they incorporate it. There's nothing wrong with having a tool in your toolbox, whether or not it's your go-to. But if you have access to the level 2, it may not be the same type of importance that it was before. Algos have changed this and that, and maybe you got to scan on your ticker to not have, on your time and sales, not to have, you know, you might omit certain print sizes, but there's nothing wrong with adding that tool to your toolbox. There's no one way to, I hate that term, skin a cat, but, you know, if you have more tools at your disposal, all the better.
Let's talk about like what a lot more people are doing these days, Neil. Like, there's no question about it. If you're on a prop floor and you're not loading up level 2, something's going on there. You're probably not going to have a job for very long. But I think a lot of people are switching the way that they digest the market. They're kind of trading off their phones. Brendo, you and I have gotten into discussion multiple times about the new way that, you know, I don't want to say it's just Gen Z, because that's not accurate. A lot more people are doing it other than Gen Z, but a lot of people are digesting information on their phones now. So there are more swing trading rather than that intraday look. If you're doing intraday trading, it behooves you to have your time and sales, your level 2, your multi-time frame analysis, because you've got to get in and out off key areas of support and resistance that are intraday based. But if you're swinging, these are wider price ranges that you're basing your analysis on. So it's really interesting how the you know, a newer generation of traders is digesting the markets a little bit differently now that they have access to their phones. I don't know if anybody has anything to add about.
Well, that's perfect. If you're swing trading, you don't care about the level 2, and you should, and you probably shouldn't.
Exactly. And just to add on to some of those good points there, as Neil said, it is a tool, but keep in mind, what I like to think is the level 2 can give you misleading information at times. The time and sales cannot lie, but then you have people on the level 2 removing orders, and then you can see imbalances on the level 2 as well too. So if you see a lot of orders stacked on the bid or stacked on the ask, this can lead to potential price targets, but again, those orders can be lifted. So I always keep in mind that the level 2 can be misleading at times, even though it's a fantastic tool. Just always keep your eyes on the time of sales as well too, guys. So if you're having one, I think you need to have the other one in conjunction as well. Yeah,
time frame is going to be key, very key. If you're not looking on an intraday basis, there's absolutely no value. And I mean, let's think about a level 2. A level 2 is only showing you orders within a certain price range on either side of where the instrument is trading at a given time. So if you're worried about 6 months from now, who cares? Let's start getting some more here. Trader Joel, where would you start a 21-year-old with financial education? Fundamental analysis for long-term, technical analysis for day trading, or options?
All three.
No, I think, that's true. I think as you have to start somewhere, obviously. And where I personally started was with just the technicals of the overall market. I wanted to understand the technicals, how the market moves. But I think as you gain more experience, they all kind of work in conjunction to some degree. So you want to start somewhere, may it be fundamentals, then maybe you'd be looking for longer term investing. Technicals is where you would get into kind of what we do, intraday trading, swing trading. And then as per options, I would wait to start options until you have a formal equity background, because it is a leverage product. But I think as you gain more experience within trading, you definitely want to combine all three of those metrics together for sure, to some degree.
Yeah.
Literally perfect answer.
Yeah.
I want to jump in here quickly too.
Sure.
If that's all good. I think as someone who has like pretty recent exposure, I got involved in the market just over a year ago when I started here, like late August 2023. And I was started here on a lot of Coursera courses on overall business, right? So just how does the market work? How does the fundamentals work? It's a lot of things that we're not necessarily going to encounter day to day when trading. But I think that basis, especially from a news perspective, was really, really helpful to kind of help understand how everything works. I also think the benefit of being part of this community for myself, through being in the studio, but also everyone here in the chat, when you hear people talk about trading, that's also huge too, because you understand what other people are looking for. VWAP was a word that I heard get thrown a lot around my first week, and I didn't really understand it. And then you hear these terms, you realize what's important, you realize what other traders are looking at, and you figure out how to interpret that market for yourself. So I think exposure, once you have the basics, is really key, and I found that to be very helpful in my journey for sure.
And that actually goes back to we had an earlier question about, the difference between trading on your own and trading in that environment. And what Adair is saying is probably, if not the most valuable, one of the most valuable aspects is the simple fact that you get to experience life as a trader around other traders who have, 20 plus years of experience and gain that information. And just being around that experience is invaluable. So yeah, great answer. There was a good question here from Roland Joe about CPI year over year, saying if it printed 5% this time last year and 3% today, does it mean inflation is 8% since 2 years ago? No, Roland Joe. What it means, remember, that's a year over year number. So exactly what it says. It's basically from today going back exactly a year. So from exactly a year ago to today, a 3% uptick would mean that in that time frame, inflation went up 3% or was 3% versus where it was last year. 5% then would be the prior year. So remember, key in on that year over year aspect for that. Let's get another one. Will biotech or weed see a move when big tech sees a big correction, boom or bust cycle? Any thoughts on these?
I don't see a reason why weed. When big cap tech pulls back, I mean, rotation makes a lot of sense to me. It makes more sense. Biotech, yeah, I would agree with that. Energy, I can see that being something too. I don't see any particular reason why the rotation would go into weed. Not the way the election went. The timing doesn't feel right for that at all. Like, what's the catalyst? What's the next move? I don't think the notion of getting legalization across the U.S., federally, I don't think it's not dead in the long run. But if you're thinking that we're getting to a top area in tech, yeah, that's not the place that I would be looking at weed at all. Biotech, yeah, sure, I'm on board with that. I mean, I'm building a position in Viking, and I recently considered where I want to be adding to Lily and looking at SPCI. Like, there are certain things that make sense to me. Energy makes sense to me. I don't see it at all with weed. Sorry, I think there's going to be a time. I just don't see the timing is right now.
Yeah, no, I gotta agree with that, Neil. With the biotech space, though, guys, with these smaller names, it can be quite risky, especially if you don't really understand the science behind it. So I'm just speaking for myself. I don't, right? So I'd stick with the bigger names that are at play. Now, obviously, you get a little bit less beta and a little less upside when you stick with the names that are already in play, because they're already more priced in. But if I could just make one quick point, Neil, and this is going to be interesting. It's going to be a bit of a contrarian perspective. For whatever reason, Chris Christie came out, I don't know, what was a couple of weeks ago, or Adair reported on this during the midday, and he, for whatever reason, believed that Donald Trump would go ahead with federal, decriminalization. I don't know if it was decriminalization or it was legalization. They're not the same thing. My initial reaction to that was, well, what the hell does Chris Christie, Donald Trump doesn't like him anyway. He wouldn't tell him. And so that was my initial thinking. Then I got some more information. It looks as if the new administration may be quite aggressive with the Mexican cartels on the border. They're talking about possibly using the military to take down some of these Mexican cartels. Special forces is what's being floated around. Now, why is this important? because if they're looking at bankrupting the cartels and basically taking some of their market share away, does that present them with an opportunity to go into the legal market and do what we did on this side of the border and take that tax that isn't currently being paid on that marijuana? On a federal level, I'm willing to bet you that'd bring in a pretty penny, especially with 300 some odd million per. I don't know what the percentage of the population that uses weed or engages in recreational activity, whatever you want to call it. So in any event, there's so many things up in the open with Donald Trump. He's such a wild card. And what he did in the past, you can't assume he's going to continue to do. He seems to change his modus operandi as he goes. So interesting take. Who knows?
That's a fair point. That's a really fair point. So I mean, that's why we do this, man. Because I'll tell you right now, I wouldn't have thought of that angle whatsoever. But that makes a very, very strong point. Now, I'm not saying go out and buy MSOS, but that Sharif, you probably got a lot of people thinking on that one. You actually,
I don't know, brother. I don't know.
No, you have me reconsidering that entire the entire point, which is to keep it simple and that, hey, it didn't go your way, you back off, let these things start to break again. But if I were to make a parallel, what I would say is that makes a much more compelling case. So the two things people were looking at for the election, if the Dems had won, was the weed names MSOS and then TAN, right? So like the solar names. Well, I can tell you after thinking about that, I still say stay off the TAN. But like Stephen A. Smith says, maybe you shouldn't be staying off the weed at this point. No, I actually really like that.
Neil, I'll always go back to this point. I've mentioned this on the show before. When you can walk down a street where there's cannabis stores in Toronto, and there's someone standing outside of that store handing you weed for free, you don't even have to pay it. There's something fundamentally wrong with that business model. So I still find it.
Well, I don't disagree with you from the standpoint of, okay, they haven't figured out really making money. But when you look at, I'm just talking about when you pull up a chart of some of these names, to get off, you don't have to solve all your problems to get off the bottom. Okay, like we've seen bottoming trading, the EV names. Rivian's not going to have to turn a profit to get off the bottom. Snowflake recently, which I got in, they didn't have to turn a profit on an adjusted basis, sure, but you don't have to necessarily get that. When the downward channel is that bad, you're not asking too much. You're just asking for a catalyst, I think. So yeah. I wouldn't be like, to Sharif's point, that has more to do with the path to legalization being the catalyst can happen sooner. I wouldn't be worried in a trade about it getting to the point of being a profitable business. That's a whole different conversation, I would think.
Very good point. Very good point.
Yeah. If you wait till something turns a profit, you're going to miss the turn on any stock in a downward channel.
Okay, but I mean, there's a mile and a half between turning a profit and literally giving your product away for absolutely nothing. So, but I get your point, and it's a good one. Question for Joe specifically on options here. AMC Leap options. Thoughts on this weekly breakout and potential BTC buying incoming?
Okay, yeah. So yeah, I pulled up my AMC chart here. Leap options on American Movie Network or whatever it may be. I would avoid this one here. Just from a technical standpoint, it's been absolutely battered. That's not something I'd be looking to get into for the long term, especially if you're looking to buy leaps. If you just go back in time, the last time it was trading anywhere higher was in early 24, so around in May. Other than that, it's been doing absolutely nothing since then. So for the past 6-7 months, leap options on this thing, I would look to avoid. I mean, anything can happen. We do know about the meme craze on AMC and GME. But again, you're going to have to wait for some specific signals in order to play any form of long-term anticipation leap there on AMC. I don't like this stock at all. But as for BTC, I'm a Bitcoin bull. We do have the IBIT options now, guys, which I really like, and I'm looking to have some fun for the long term in this, because now you can hedge your positions. You can now protect that downside. So that's something I'm going to be keeping an eye on for sure. So you're going to get the thumbs down for me on the AMC, and then the thumbs up on the IBIT Bitcoin options, because I think now that the Wall Street has the ability to hedge positions, protect downside, I think this is going to bring a lot more volume into this underlying asset, and this is what's going to drive Bitcoin crazy, because now there's less fear within that underlying asset of losing a lot of your capital because of the ability to protect that downside via options. So that's my look there on IBIT and Bitcoin, and then AMC as well is absolutely, yeah, that's something I would not look to play a lead in. If you're looking for cost effective and you think, hey, I like AMC because it is cost effective, then the chances of you losing your money are extremely high. That's just a stock you don't buy a leap on.
All right, let's talk moving averages, guys. A big with 1, 2, 3, 4, 5 eyes in it. So very big question for the team. How do you guys use moving averages? I see you using VWAP a lot. How do you use moving averages? And what MAs specifically would you recommend?
So I'm probably different from almost everybody on the show with regards to moving averages, because I use moving averages on a daily chart to give me a bias in terms of direction for that day or that week. Like I like those for trend bias on a daily chart. The extent that I'll ever use it on an intraday chart will be if I cannot find, like if I'm in a trade that's already in the money for other reasons, support and resistance trade, and I don't like I'm not getting a clean trend line or something like that to work off to take profit, then I might, in that situation, I'd throw up a 9 or a 50 and use it more or less for things like I can't find good dip buy zones in a stock I know I want to trend bias long in, let's just say. I don't have a good exit plan for the stock. Then I'll use things like a 9 and a 50 to give me a dip buy zone if we're too far away from VWAP, or give myself or take profit because I don't have a trend line reversal on. But I don't sit there, like I never use them for a reason to get in. Let's put it that way. Unless I've exhausted my usual methods of support and resistance and VWAP and prior resistance turning into support. Like those things always come first for me, and then I might use a moving average.
Can I chime in on this super quick? I have my affinity for my small cap gappers. I have a specific way that I use the moving averages for the small cap gappers, and an entirely different way for the large mega cap hyper, whatever, the Mag 7. So the small cap gappers, what I'm looking for is for the respect for the 10 exponential moving average on the 5. I'll look for a trend to respect that level. So if I'm looking at building a position and something isn't giving me a pullback into a key level, a key area of technical support, I'll look to get in on a retracement into the 10 exponential moving average on the 5-minute chart. However, that isn't the only way that I use it as well for the larger cap things. And what I'm looking for is the same thing, but I'll be looking for a deeper retracement into the 20 exponential. Now, those will be fewer and far between. They're not going to be as many into the 20 as there will be into the 10. So be, cautious in what is an actual move into the 20 and what is an entire move back down, possibly a reversal on the day. So that's personally how I use them. And one last way to move back, to the small cap gappers, I like the 10 exponential moving average on the 5-minute chart as an informal gauge of overbought and overbought conditions, because I don't typically short these. So what do I mean by that? So if I look at the price action on the chart, perfect case in point right now, UAVS, have a look at where the 10 exponential is on the 5 relative to where the price action is. It's too extended. It's far away. The price action that is too far away from the 10 exponential. I'll need it to come back a little bit closer to that and then set up again. So once that distance between the 10 and the price action gets too far for these small cap gappers, I'm a little bit cautious there.
All right, great stuff. I think also it's really personal. You have to, over time develop what works for you. If that includes moving averages, great. If it doesn't, great as well. So there isn't a one size fits all, I think, of answer for something like that. I mean, you can say that about any indicator. Let's talk about what else do we have here? Time constraints. Okay, here we go. From Elon, can you have traders talk about how they manage time constraints for each trade? Do they get out of a trade if, say, in 5 minutes, it doesn't go the direction they anticipate? So that's more of a, do you even put a time limit on a trade, saying when you enter a long, if it doesn't do what you want it to do instantly, is it a cut immediately, or does it have to break a level in order for you to stop out of it?
It depends on the type of trade. So if I'm taking a clean breakout trade, like the other day, like Tesla 135, or just something along those, actually not 130, 330, 345. And then there was it doesn't really matter. It could be Nvidia one day, it could be Tesla the other day, it could be an Apple 235, whatever it might be. A breakout trade specifically for a day trader, if that doesn't go in some semblance of right away, then to me there's something wrong with it, because it's a very specific setup. The other one that I'll put a time constraint on is a mean reversion trade. If a stock is trending up or down, and I'm entering because, hey, it's at a key level and it's breaking trend in here. Well, the idea of it breaking trend is you're supposed to get a relief rally, or you're supposed to get a reversion back to mean in a timely fashion. If a stock is in a steep uptrend, breaks the trend, and then goes sideways, and you're trying to short the reversion, that's not good. You don't want it holding support after it supposedly broke uptrend. That's supposed to work in some semblance right away. So I could probably, if I think long and hard enough, I might be able to come up with other specific examples where time does matter on the trade. But most of the time, as a day trader, the only thing that should matter time-wise is the close at 4 o'clock, or the imbalances at 350, or an economic number is coming out, or something along those lines. Like, I might care about those from a time aspect, but it's very specific to the style of trade you're doing, like breakouts, mean reversion, trend breaks. I think if they're not working right away, it's a problem. But if you're just sitting there on a good level, a support and resistance level, I don't think you should care whether it takes 5 minutes to bounce or 20 minutes to bounce, as long as it holds your stop. Like, those are fine. Like, that doesn't make a difference.
Yeah, I think and a good example of this might be, if you're looking at a big tech name that's at, say, all-time highs, or at a huge psychological level, 500, 1,000, something like that, and there's a huge order there, maybe an offer that the stock is breaking through. If you're trying to play that breakout long through that huge offer and the selling that's sitting there waiting, if you trigger into a long and it doesn't go immediately, and you see sellers return and comes right back below, that's something you want to get the hell out of the way immediately. If it does trigger you into the long and then it just goes, that's when you want to see it work right away.
Yeah. And, well, the other point for the breakout, though, is you have to remember, when as active traders on a prop floor, we can just get in again. Like, if it breaks and fails to break, and we've done this, you'll see us do it live on the show. It fails to break. Well, I'm not going to wait around for stock X at 150 making a breakout. I'm not going to let it just pull back into 147 on me. No, I can get out 149.5, and if it breaks away a second time at 150, I can take that trade. If it bounces off of VWAP at, say, at 147, I'm just making up a stock. I'm not actually having an example here. I could buy that dip if I still like the trend. You have options available to you. Like, if you're taking a one shot, it's breaking a level and swinging it, then maybe you don't care. But as a day trader, the ability to just, if it's not working off that level the first time, sometimes the second break is good. That's doubly true if a stock fails in the first, like that first 5 minutes where you get that failed breakout. Sometimes it rinses so many people who love that level break, that when it happens and breaks that area at like 10:30, or like at noon, or maybe in the afternoon at 1:30, there's a lot of people who have given up on it, and then the second breakout ends up being good. So you have to factor that in as well. Like, again, it's very different being a day trader versus a swing trader, and the ability to take it a second time through, or wait till tomorrow when it tries the same move, you can be good to go.
Yeah. I want to mention that Apple came into about 30 pennies into all-time highs there, guys. So all-time highs 237.49. I think we just weaseled up into 14s. So that's still continuing to be strong. It's not even up 1% on the day. So still below that, but working into all-time highs, guys. So keep your eye out on that. That could be an interesting short. It has a tend to mean revert. Apple runs into the highs and then sells off as the day goes on. So there could be a couple of shekels to be made there. But to build on the earlier call out that I was talking about, UAVS, guys, continues to hang out at highs. It's not parabolic like it was before, finding resistance at $9. This is another drone play, guys. Definitely not the beautiful chart that some of the other drone names that we've looked at. It's been, it really, really down into the right until, let's call it a spade a spade. I mean, it really just found its footing on the 14th. It looks like the red day stopped on November 14th. It's been putting in higher highs and higher lows. So UAVS definitely on my watch today. It's still trading at highs. And some of the other names that we talked about today too, like that UCAR, still trading at highs as well. UMAC, still near that $18 level. Very volatile name there. So that one is still going. See how Rocket Lab's doing. Rocket Labs, RKLB, guys, holding that VWAP area at around 27.25, looking to curl back up. So that one's still in play. I don't know what you guys have on your purview there. Some of the names I'm looking at.
I was actually just putting it into the checks. I saw a few people mentioning MSTR. Okay. MicroStrategy, right now it's a semi-broken stock, and I think when you look at a day like today, it's a very good example of that. Gapping up, Bitcoin made a run at like 98.5, 99, and trending up. And the second you lost trend on MicroStrategy, it's just the manner in which it pulls back. Now, obviously, Bitcoin's pulling back too. And I think just for clarification for anyone in the chat, it's not like we're not pulling back. We lost 98,000 and we're at like 97.3 or something like that. You just have to understand that the moves are outsized. In MSTR, like when it loses a bit in a big way, and the percent moves are just going to be bigger. It's not that Mara isn't pulling back. It's not that Bitcoin isn't pulling back, but Mara's pulled back, and is essentially just like Mara's at 28.80, let's just say, which it is, and it's not even at its higher low from the morning in terms of pulling back. Whereas when you look at the MicroStrategy chart, that one. Like at that same time, when you looked at the higher low on Mara, MicroStrategy was making a lower high and is now right back where it started from, on Wednesday. It's just outsized moves to the downside on any weakness in the crypto space, and that's what's going on with MSTR. Definitely worth watching. But as we said from the morning, a lot of the bigger moves were going to be done in the bigger cap tech names in that first initial push. And now all of a sudden, it's like Sharif will keep pointing out to you, the UAVSs of the world, of the SOUNs. Like those are the ones that are more likely to give you something or anything in the last 45 minutes here. And like by this time, all the big traders off the desks are done in New York, and that's just how it is. So you've got to be looking at some of those small caps. SOUN, Soundhound's another good example of that.
Mm-hmm.
Like the stock, it's still trending toward the highs. Now, not as parabolic as it was earlier, but it's still in a decent trend up, putting in some higher lows. It just gave you a dip by a few minutes ago. It's got a new trend since it broke $9 that you should probably slap on there. It broke 9, got to 937, pulled back and bounced off 9. So it's got another higher low. If it breaks that trend, I would give up on it. But that's worth looking at for the last 45 minutes.
Yeah, totally, guys. And I just wanted to point out, considering we're speaking of highs, SPY continues to make all-time highs, traded above 603 not too long ago. And I was curious because we are seeing a little bit of that pullback in the tech sector. So I said I wanted to find out what was necessarily dragging the SPY higher. So I pull up the XLF chart, and I see that continuing to move higher, pressing some pre-market highs as well too. So look for that, a little bit of that strength being helped in the SPY by XLF as well too, guys. So that was my look on that one.
Yes, sir.
Mm-hmm.
Yeah, let's look at OKLO as well, guys. This could be an interesting trade as well. Depending on how much. Yeah, we got 45 minutes left. So this is pulling back into VWAP at 2350. So there's some support there, not just VWAP, but we also have the top end of the initial bull flag there on the open. So the 930 bump, we got into about 23 and 2/3, drop down to about 2270. And so that was kind of the bull flag setup continuation, now coming into that 2350 again. So VWAP setup on OKLO, another one we've been watching run. It's been a strong name. It's got a bull flag on the daily. It's got a bull flag on the intraday. So this one, keep your eye out on this one. What else we got over here? Yeah, Neil, you already mentioned Soundhound, so I didn't want to mention that one again. Yeah, it's trading near the highs. I don't know, Adaro, anything you're watching on your end?
Yeah, I was just looking at that rocket lab that you pointed out earlier, the fact that we're now kind of rejecting around where the bottom of that previous Adara-Padera range, as you called it, was kind of forming there, that 2750, 28 area. Aqua, I just want to point out here, that is about a 22% short float. One thing I'm watching too that I was just kind of looking at, this is more than a daily chart, but I was like just thinking about levels. I haven't looked at this one in a while. McDonald's. So McDonald's here, we know McDonald's has been struggling since that whole fiasco with the E. coli. Then they had earnings, and those were also kind of messy. Since earnings, we have not broken above like 301. We've tested that area a couple times. We've fallen lower. There's clear support though as well at the 283, 285 level on the day, which was also an area where we did have a gap up to previously. So this is, I guess, more longer term, but I'm really interested in seeing what McDonald's does in between that 285, 301 range. I guess that would be an Terra range on a larger scale that I'm watching. Intraday, though, yeah, I mean, CrowdStrike is of interest to me. That was interesting for day one, and that's what I'm going to be looking at for day 3 on Monday morning.
Yeah, it's amazing to see, guys, the market just melting higher here on pretty light volume as expected, I guess, into the close. Remember, 45 minutes to go if anyone's just joining. Market closes at 1 p.m. today. So hope everyone had a great Thanksgiving. Hope everyone's having a even better Black Friday. Thanks for hanging out with us. If you're joining a little bit late, there's construction. It's a long story. We had pictures earlier. We told everybody there's construction in the studio. It's all under plastic and being repaired right now. So that's why we're doing things this way today. Krasi Krumov with a great question on trading resources, level 2 specifically, and time and sales. What would be a good resource to get better at reading and trading the level 2? Krasi, stand by. There's big news on this coming. I'm not going to say anything today, but big news on this coming, possibly even as soon as the beginning of next year. So stand by, and that's only a month away, obviously, so not too long to wait. But again, the question, guys, if anyone has any suggestions on learning level 2 and time and sales versus just, I mean, let's be honest, all the retail platforms out there, very, very heavily focused on charts, very heavily focused on technicals. There's not a lot on the level 2. That is, though, the best and most pure view into what is happening in the market right this second.
Yeah, you actually just need screen time in front of a level 2 and a time in sales. And I think everyone always wants a different answer, like what book can I read so I can get better at tape reading and reading level 2. There isn't one. And as I said, when I started out, it was such an important thing, and this is 20 years ago, but when I started out, you weren't allowed to look at a chart, and that was so that you could immerse yourself in getting the rep, just getting screen time focused on level 2 and time and sales. Because you can do chart analysis, and you can go over the charts and over the weekend, in the morning before the market opens, in the aftermarket, and you can scan for opportunities. You can do all of that stuff with charting without the market being open. You only get a certain amount of time throughout the day to be able to analyze the tape, to be able to analyze the level 2. Now, this is another good reason why tick replay can be important. And we used to, when I was a trainee, we'd record our screens and we'd go over, and then we would double our time sometimes going through looking at certain key moments in the level 2 in the tape. That's another good way to do it, like recording when you do have access to it, recording like maybe big breakouts, how did the stock trade at that support and resistance level? Yes, I was watching it, but let's like after that 20 minutes is done, I can go back and look at that after market and then really break it down, watch it 2 or 3 times. Were there any clues that I could have noticed in the tape? So take advantage of take replay if you have that, but you just need time in front of the screen. You know, you want to become a better chess player, play chess.
Yeah, I couldn't agree more with Neil there. It is absolutely screen time. And just to add on to that point, well, some people are like, well, how do I get more screen time when the market is only open X amount of times, X amount of hours per day? And I was saying this to Sharif in my spare time. I have a platform that allows me to run replay. So I have the ability to run past dates and then look at the time and sales at specific areas. So for me, what I did, which gave me a lot more experiences. When I collected data on my trades, I would run them back. And if, say, I'm looking to play a breakout trade, I would run that time frame, and then I would specifically look at the time of sales and see how it reacted in that specific breakout time or that breakout area. So that's one thing that really helped me. Now you have the stock is breaking out, then you can watch the replay and see how this reflects in the time of say I did.
Dara, you kind of you're a bit of a newer. What do you have? What are your thoughts?
Thank you, Sharif. I was actually just about to jump in here. I totally agree with Neil's answer on screen time. But one thing that I found as well, you know, I've talked a lot about this specifically with order book and tape on spreadier stocks, but I think regardless, what I've noticed is different types of stocks move different ways. Like your NVIDIA, Tesla, the way that order book is going to move is going to be, to use a term from Obi, showed to him, distinctly different from how something like a small cap is going to move, how a spready stock is going to move, right? And you can see things the more you watch different types of tape. You can notice these different patterns. For example, how things move on a reversal is going to look different on a Tesla compared to an Eli Lilly, right? Or to a small cap. Dave talks a lot about like reading order books as well on the small cap names. So I think the type, watch tape and watch level 2 for a lot of different types of tickers to understand how they move differently from one another. I think that was huge to help me learn and find my own styles.
Yeah.
Yeah, that's a really important point. I think just to jump in on that, yeah, when we're talking about screen time, you also want to make sure that you're looking at the right things, because if you're sitting there watching the tape of Neo and you're trying to get better, like it's fine. Neo's in play one day, but like most days, the way that like a Neo or a Ford is going to trade is going to be vastly different watching the tape than when it's going to be in play. And to that point, when a stock is like truly like it's a really big deal, like like when SMCI falls apart or short seller report happens on MSTR, or just a massive headline comes in on Boeing, those types of events are a unique opportunity where you're going to get far more data points when it's doing big relative volume, and it's going to be trading like haywire. Replaying those is gigantic as well, because like a day where something is hyper in play, you're going to get so much more information out of the tape than you normally would. Those are days you can't miss. You know, we talk about, as a trader, you've got to be in your seat because you never know when something crazy is going to happen. Not just because trading opportunities are there, but because learning opportunities are going to be there. Like you might have missed the perfect chance to get 10 days worth of learning because a huge vault or huge story comes on Apple or something, and then you get to watch the tape on that day. And you get to replay the tape on that day, and that's like 10 days worth of learning for you. So you never know when those are going to come, and understand that those big, massive events are doubly important. Like I said, if you just watch Neo's tape every single day, it's probably not going to do too much for you. But if you watch it when it's in play, that one day will certainly pay volumes and pay dividends.
Yeah, for sure. Just to add one final point onto that, and something that I did was, guys, find a stock that breaks out in the opening drive, find a stock that breaks down in the opening drive, and then find a stock that just moves completely sideways for the opening drive. And then you'll be able to dictate the differences in each one of those as well, too.
Yeah, it's a great call.
Yeah, great points. Good question here, guys, on strategy. Candy Rams, just going back to earlier here. asking essentially, does everyone on the show and everyone on the floor essentially trade the same strategy, or are there some variances, similarities? And I think a good discussion to have, maybe, or maybe the start of a conversation on the importance of everyone having their own strategy and their own confidence in what they're doing, and not just, looking over someone's shoulder on your left and then looking over someone's shoulder on your right to see what everyone else is doing, but just focusing on what works for you.
So everybody has their own distinct style and strategy in trading. That's just period. Like no two people are going to be exactly the same, even if they're looking at the same stocks. And to that extent, the best example I have for that is a story that I tell pretty much every single time it comes up. So if you're a long time, you've probably heard this before. When I graduated as a trainee, I sat next to a particular trader. As a trainee, we sat together. When we graduated in the same month, we sat together. And then for a couple of years, this trader and myself and Sean ended up opening our own trading floor, and we always sat next to each other trading. The first 5 years of trading, what I can tell you is we would trade the same stocks. We would almost on a daily basis. We're trading exactly the same stocks, the same basic strategy. He would probably shut down 10 times more often than I would. He would have bigger days. His big days would be much bigger than my bigger days. He would trade 3 times the amount of like physical trades that I would. Right. So regardless of share size, most of the time we'd be around the same shares. He would take 3 times as many actual trades as I would. Very, very different, executed on the same stocks. At the end of 5 years of trading, we had a net that was 5. We checked it up, and just for jokes, we were 5% apart on lifetime net after 5 years of trading, and doing so in a vastly different. He traded 3 times as many shares as I would, or trades as I would, and we use basically the same share size. So he's 3 times more active. He's swinging more than I would. He shut down more than I would, but we're about the same thing, and our general strategy is the same. And the best part about that was because we were looking at the same stocks and general strategies, but had a vastly different approach, we learned a ton from each other because we never saw things exactly the same way. So I learned a lot from him, and he learned a lot from me. As you can imagine, he was taking far more opportunities, and I was a little bit more conservative in that. So it was just a good blend. We weren't yes men to each other at all. So I think it's important, the fact that everybody trades differently. That's one of the biggest strengths of Trader TV Live, is that you're not just getting one particular point of view and one way to look at things all the time. Everybody's different. I'm different from Sean, and who's different from Sharif, who's different from Joe, who's different from Adara and Sataya and Obi, and right down the line. And that's always going to be true. Shout out to Obi, by the way. He's always killing it.
Oh, yeah. Guys, I know that I'm deviating from the question here, Brendo, but I want to mention a little bit of a headline that I just saw there. It looks like the Trump administration may announce more tariffs on some of these solar panels, expected today, possibly this week. The reason I'm even mentioning that is because, well, you've got the likes of First Solar that actually makes their solar panels in the United States, and some of these other locally or domestically produced names that are actually getting a bit of a bump up. FSLR here up 3%. It's not the biggest headline, but definitely something to be on the watch for, because we know that there's more announcements as we get closer to that January 20th date that he's making these announcements. So FSLR, a nice little bump up, still south of $200, $198.80 HOD, but trading near the highs, guys. So First Solar with a nice little move there.
Yeah, that just ripped up $6.
Yeah, that'll work.
Yeah, crazy in a half an hour. Yeah, good catch. All right, I think we're pretty much through all the questions that I see. Anyways, about 30 minutes to go in the trading session, guys. If you have any more questions, doesn't matter what it's about, market related, trading related, strategy related, throw them in the chat. We'll get to those. What's everyone's weekend plans with Black Friday shopping top of everyone's list, I'm sure. Here's a better way to put it, maybe. How much of your Christmas shopping are you getting done today on Black Friday? Because I know I'm going to try and do it all.
Yeah. And first of all, yeah, 100%. Like as much of it as humanly possible. So I do a few things during U.S. Thanksgiving. Usually there's a bunch of like cleaning up in the house I got to do, because when you have a day off from the markets, there's stuff I got to get done. I get my winter tires on. And then the rest of it is get as much of that list done as possible. I cannot stand last minute shopping for Christmas.
Same.
I'm not built for that. Not built for that. I don't want that stress in my life, man. So I try to get as much of it done as possible. So that's what I'm about. I'm going to watch some football. There's a game tonight. There's a game today. KC plays, so I'm actually excited. I got someone going in fantasy, so I got Mahomes in fantasy, so I'll be watching that at 3 o'clock. But yeah, I'm going to be getting some more shopping done for sure. No question about it.
Online or in the brick and mortar, Neil? What are you gonna do?
Oof.
Do I look like someone who still wants to do brick and mortar?
Is that even a question?
No, but hey, I figured a little more old school. Maybe we would go to that.
Well, you know what's interesting is, yeah, I've gravitated further and further away from going into the stores to do my shopping, and what's actually really interesting about it is, I've had more desire to like walk around and maybe like go into a mall or go into a shop because of my recent Achilles injury. Like I'll look for excuses to go for a walk now. Like now that I'm walking without the cane, I just like doing it. You know, like as I couldn't before. Like the other day, I had a dinner with some high school friends, and I had the option of, okay, like, am I going to take the TTC or am I going to go on a 30-minute walk to the restaurant? And it was a little bit chilly. Normally Neil's taking an Uber or taking the TTC because it's cold. But I was like, I just wanted to walk. So I was pretty happy to be able to do that. So maybe I will go into a store. Probably not.
You know what Ramram's doing in the chat, Neil? Ramram's like, what are you guys getting me? Why is it always about you, Ram? We're talking about our family here. Can we get a day off? We're at home today.
Why do you always have to, Ramin? What do you want? Okay, because Sharif has been giving you all this grief, and all you do is put on a smile, make us look and sound good, and then whenever you have candy or treats or cookies or chips, you're always sharing them with me. So don't let Sharif talk trash. All right, what would you like, Ramin?
What would you like, Ram? Put it in the chat. We'll see what she's interested in. Joseph, what are you doing, sir? What's on the hit list?
Dude, you know what? I got a hockey game tonight, so we're gonna play some hockey. I don't know about doing any early shopping, even though you guys are kind of intriguing me about that. Ooh. But you know what? I'm not gonna do any brick and mortar. I might scroll on the old Amazon here and see what we got going on and get some early gifts. So we're stress-free come the holiday time.
I wanted to mention one quick thing, Brendo.
Yeah, go.
You know, I was looking at the iPads a few months ago, and I want to mention that for anybody who's interested in getting some of these more expensive products and getting a safe version of them, so to speak. So Walmart selling refurbished iPads, nice, and they've got different qualities, guys. Like give them a designation. They're like, okay, mid-tier, really good, no, excellent. So you know kind of what you're getting. Amazon's doing it, Brendo. Walmart's doing it. They're all getting that resale thing. So if you're looking at saving a couple of bucks and, you know, your loved ones don't mind, yeah, just throwing that, you know, your way.
Yeah, I saw that Best Buy does that as well, even with all Apple products, phones even as well. Diego Garcia with a great question here. Can you please talk about risk management regarding monthly, I guess, drawdowns in general, but talk about risk management maybe from a month-to-month standpoint.
So it'll be a little bit different from exactly what you're talking about, but on a prop floor, you're still paid out on a monthly basis, right? So you get a commission, and there's like a settlement every single month. So you always judge yourself based on the month. And what'll end up happening is traders don't like starting the month off like negative or whatnot. So you might have a daily loss limit as a trader for us, and we don't necessarily have a monthly drawdown. But the principle is about the same. One of the hardest things to work with is when an A++ setup happens in the first week of the month that you know you need to put more risk into because it's your best setup, and then it loses. There's a certain reality that can come into play that you don't normally want to trade. You don't normally want to trade your net in that situation. But there's not a ton you can do about it. If you have a certain drawdown and that A+ setup that's worth half of it or whatever, a significant portion of it, that comes out in the first portion of the month, and you take the hit, sometimes you've got to buck up and just share size down. And there's just not much you can do about it when you have that reality to deal with. You know, and just to bring it down to another time level, as a day trader, the same thing is true. If an A++ setup happens at the open and it doesn't work and 80% of your day is gone or 50% of your day is gone, you might just be in a situation where you're putting a little bit less towards trades that you normally would put more in. Take them, but you just have to size down because of that reality. You don't want to be trading your net, but there are certain things that you can't get around. Your daily loss limit as a prop trader, or like, you know, if you're a retail trader and you have a drawdown of X and you've past a certain point and your internal discipline rules say I cannot risk like normal and make it through the rest of the month. That's just something that you have to be able to deal with. On a general sense, you don't want to be trading your net, you want to be trading your strategy.
100%.
But every now and then, the whole timing of the monthly, hey, for us, it's we settle every single month. Sometimes that reality comes into play. And there's nothing I know lots of traders, like in that first week, they hate taking a big hit because they know it's gonna potentially change the way that they risk throughout the rest of the month. Some of it's just bad luck, but if it's a really big hit or drawdown, you can't necessarily ignore it because your bankroll is your life at the end of the day as a trader, and sometimes you have to preserve it, and there's nothing much you can do about it.
Yeah, I want to throw a question your way too, because you had sound strategy on this. So I remember when Lily was really moving, you trimmed a little bit off the top, right? And you were taking some profitability on Lily. And I think this is a question that we get often, Neil, is how do I know what methodology to use to take some profits for my longer swing trades? Like, I know that some people, you know, they don't want it to be any bigger than any 1% of their portfolio. Some other people look at technicals, you know, if we don't have a blue sky setup. Any suggestions on that to kind of keep things in check in the portfolio?
Yeah, first of all, like the first decision I make is whether it's, am I trading it? Is it a long-term hold or is it a trade? And if it's a trade, I'm the type of person that I do not enter in a trade without an out. I do not enter a trade without at least 1 or 2 profit targets. Right, so I know where I want it to go. And that's the difference between Snowflake and Eli Lilly for me. Snowflake's a trade. Eli Lilly was a long-term hold. So the only reason I was going to ever trim Eli Lilly was because it became too big a portion of my portfolio relative to what I thought I wanted to be at the top, right, which is my tech names. So once that was the case, I sold to Eli Lilly at $922.22. Now, the price that I picked was because I'm funny like that, but it was just more along the lines of, it got to that point. I think it was after an earnings report. I'm like, okay, it's time to trim. It's just too big. I need to take off 10%. And if it pulls back, I can consider, because what'll end up happening is it'll pull back, other things go higher, and then it readjusts, and suddenly it's at a portion of my portfolio where it makes more sense. If I like the dip, I can add back in, and suddenly it's not overweight because crypto caught up and big cap tech went higher, all that kind of good stuff, right? So it was no longer the big weighting that it was. But that's usually it. You have to decide trade long term. I do not blend those two things. And every time I have blended those two things, it's led to making bad decisions. So I do my best not to blend. If it's a long term, the only reason I'm selling is something fundamentally has changed in the company that I don't like, or it's become too much of it. I want to down weight it in my personal portfolio. Those are the only 2 reasons I will ever sell a long-term play. A trade is so different because if I go into a trade, I have targets in mind.
And a lot of people don't know this, but you know, Brendo has one hell of a trade on Google, and he may have actually sold the top. So you were holding Google for a while, Brendo. You got out at that 190 area. In addition, aside from the possible headwinds that we've talked about that may come for this name, what kind of made you feel like this was the right area to take profits?
I mean, we've talked about it a few times on the show, but I think the simple fact that fundamentally their business has changed, in my opinion. Or at least part of their business, part of the majority of their business is still ads and search specifically, and the revenue that they generate from that. And I mean, you and I have mentioned many, many times, Sharif, the way you approach search on a daily basis now has fundamentally changed. I'm finding myself very rarely going to Google to search anything now. It's always ChatGPT or some sort of AI first. And then if I'm looking for specific details, Google very much second. So I think that was the primary reason. I mean, fundamentally, their business is just, in my opinion, not the same as it used to be. Sharif, there's a good question for you specifically. And Yoel, Reina, I don't know if you guys address this, but anyways, there's no such thing as a dumb question. Sharif, you mentioned blue sky setup from time to time. You want to explain that?
Yeah, absolutely. So when Neil and I or whoever we say blue sky setup, what we're referring to is the fact that there's no upward resistance from where we're looking at right now. So just case in point, if NVIDIA was to take that 150 level decisively and continue to run, well, there's never been a higher price right now on NVIDIA. So we don't know from a technical perspective where the top would be. Now there's ways to work around this, right? So when we say blue sky setup, we're saying that there's no upward resistance, but there's a couple ways you can weasel around this. Number one, you can look to fundamentals and say, okay, what do I think this company is worth intrinsically? If they reach their projected guidance in a market cap sense. Okay, so this should be a $4 trillion company. Well, what's the $4 trillion price target on the chart? You can look at it from a fundamentals perspective. You can also come at it from technicals. Michael Noss likes to use these, I'm about to say it, Fibonacci extensions, right? So he basically gauges from the 100% breakout where to expect upward resistance in a blue sky setup. We did a lesson on this not that long ago. Excuse me, Adara and I. Project up by no means sign.
Yeah, that's a great point, because I think obviously when a stock is at prices that it's never traded at before, so I'll use an example because it was recently I was in Snowflake. The stock was just trending down and bouncing off the bottom. On the way back up, you're going to have major moving averages. You're going to have all kinds of pre-earnings prices. You'll have all kinds of things that you can look towards that are overhead resistance. When a stock is breaking all-time highs, there's a reason you'll hear Brian Chan talk about anchored VWAP, or people use Fibonacci's, or if it breaks a trend line or a moving average. There's just so many other things that are going to come into play because you have no price history. There is no obvious level where people are going to run away. Now, when it's a really quick, short-term move, one of the things I like to look for is setup, and then just had a very quick break of the high and is running rapidly. Sometimes I like to look for, when it consolidated off that high, the simple technical of the last break, it consolidated 25 to 30 for a couple of weeks, and then it broke out from the 30. Well, the first obvious level I'm looking for is the 35. What was its previous range before it made that break? And then that's the first place that I usually look for a profit take. I don't really use Fibonacci levels, but I have dabbled with them in the past. It's just you find whatever works for you. If it's Fibonacci's, it's that. But I think ultimately you do have to find something that works for you, and especially if you're a support and resistance trader, and that is the foundation of your trading, which I know it is for many people. It is for myself. Then when something is breaking all-time highs, you have to have something else that you're leaning on. That's why I like trend lines. When I started out as a trader, my charts were an abject mess with trend lines. I would draw them all over the place. If you think Obi's charts were messy with trend lines, then you didn't see mine when I was a trainee. But I went from having a million of them up to the point where I couldn't even read my chart, to figuring out which ones worked for me and where to draw them and when to ignore it, and what is too many, and when to leave them in there even if they've been broken, little things like that. You find what works for you, because you don't always have previous price history to work with when you have a stock which is trending. And the crazy thing is, when stocks are breaking out and making all-time highs, those are the best plays. So you don't want to be ignoring them just because you don't have price history. Those are the things that are going. You've got to have some ideas as to what to look for on them. By the way, First Solar could get to 200.
Yeah, Neil, I gotta interrupt for a second.
Yeah.
We've got a little bit of a headline. So data coming in from the Commerce Department. So we've got specific tariffs now that are going to be levied against these solar panels. So, and nothing from China though. Funny about that. Anti-dumping tariffs of 125.37% on solar cells coming out of Cambodia, and 81.22% from Malaysia, 70.3 Thailand, 271% from Vietnam. So they're coming from they're looking at basically covering all the different areas except the one that we all have our eye on from China. Still no data there. So First Solar moving up, I guess, maybe on those data points. Just wanted to mention that.
Yeah, great point for sure. I saw in the chat, Josh Jay was asking a question. How do you decide a long or short at a resistance level? What needs to happen to change your idea of shorting to go long on a breakout? So usually, if a stock comes into a support and resistance level, the first thing I consider is what is the general trend, generally speaking. If it's a trend up, then unless it's a monster resistance level, my first thought is I want a continuation of that trend. If it's gone too parabolic, I think is overextended and parabolic into a resistance level, then I might like it to short a strong stock. And likewise to the downside, you're looking for that rubber band action in most senses. But one of my favorite, and I say this over and over again, one of my favorite types of support levels is prior resistance. And when that's the case, I'm almost always looking to be a buyer in that situation, because if it's a prior resistance turning into support, that's supporting an upward trend and I want to be a buyer of it. In terms of reversing a trade, the way I look at it, it's got to be a monster A+, triple OG level if I'm going to change my mind in the direction that I'm trading. And then the second thing I got to look for is there a reason why, if I'm short at a big resistance level and looking to reverse, is there a reason why other short-term shorts are not stopping out here? And if they are not, why would they have wider stops? Because if you're taking the reversal, you're looking to capture people with wider stops at that level. They're holding when you're getting out, and then you're reversing because they're going to hold on and stop out at an even higher level, and that's what your reversal is taking advantage of. So I need to be able to see a reason why there's a lot of shorts that are staying in, putting in a wider stop, because then I'm getting out with a tight stop and reversing so that I can take advantage when they start liquidating on their wider stops. So that's the kind of thing I'm looking for. So does it have maybe confluence with, I'm shorting it on a 15-minute. Is there some confluence on the daily chart why people are giving it more room? And if that's the case, then my flip is when those guys are getting burned and my flip is going to take advantage of them. So I always look at what the counterparty might be when coming into a flip level. And there's no exact science to it, but not every single out can be a flip, right? So always start from a point of skepticism.
Yeah, I think that's the best point on that. Just because it's not a short doesn't make it a long, and vice versa. Just because it's not a long doesn't make it a short. Male Cat with a interesting question. What's new and exciting, or what are new and exciting things coming to Trader TV in the near future? Any long-term vision? So much, Male Cat. There's a ton of stuff coming into the new year on the education side of things. I can't say too much about it now, but more on the education side of things, more on the long-term side of things, as far as more swing trade ideas, more investing type of content, more segments, more live on-air content when it comes to that. But I'm going to throw this question actually back at you. Throw in the chat, Male Cat. What is it that you want to see more of? What is it that you want us to provide for you more of? And we'll be happy to address them.
Yeah, no question about it. We want to hear what you guys have to say. Yeah. You can tag Bears versus Bulls, tag Adair or I think Joseph's in the chat as well. I think we're all in the chat. So tag us, let us know exactly how you feel. I mean, we've got Joey Options now. He's dropping a couple of options lessons during the How to Trade show. So you've got your options coming there. Brendo mentioned we're going to get swing trading. Obviously, that's going to be covered, as we talked about this earlier on the show. If you weren't with us, more people digesting the markets through their phones rather than on a desktop now, and that's obviously in vogue. So, yeah, we definitely want to hear from you guys. Tag us, and yeah, there the Piper saying swing trading stuff, no question about it. We always get stuff about education. It's really about what you guys want in terms of that education. We'll customize that for you guys, no question about it. Joey, any thoughts?
No, yeah, I totally agree. I know we talk a lot of options on the midday. We have those lessons, but I'm seeing in the chat that a lot of people want to see some swing trading as well too. I really like this because I do think it does fall in between the realm of investing and intraday trading. So that's one thing that I want to touch in because I do have specific strategies that I do implement using swing trading. So looking forward to kind of showing you guys what kind of criteria I look forward to and look at specifically in swing trading. I know I talked to you guys a lot about gap fills and specific indecision on candle prints. So that has a lot of influence on my swing trading predictions. So yeah, we can definitely get into that.
Yeah, no question about it.
Mm-hmm.
Yeah, I'm with you. Like, swing trading for sure. Bill Schnoe just said coaching sessions. One of the things that external pressure. I think one of the things that is the best part about the live show is, we're always trying to answer questions from the chat, especially when things slow down. And oftentimes that's when you'll get the best answer. When something is in the moment and there's that opportunity to learn from something that's happened at that point in the day. Because like the second Bill you post this in the coaching sessions, external pressure, my mind immediately jumped to something that I would say for a lesson of the day at noon. Like 100%. One of the most difficult things, and this happens on the trading floor a lot, is getting FOMO. It's one thing to get FOMO looking at a chart of a missed opportunity. It's another thing to get FOMO when in a trading community there's a trade that everyone's talking about or excited about or in, and it's not part of your strategy or maybe not something that you would do or would make money for you on a normal basis, and you get that pressure to make that trade. That is a very difficult thing on a trading floor. I've known traders that will jump into anything that gets called out by one of the more senior traders. Like when I was a trainee, there was literally a guy who would sit there and stare at, like, he sat behind one of the more senior traders and he would try to copy him. And that's, you cannot succeed that way. There's a lot of pressure to just do exactly whatever a profitable trader is doing. It doesn't work because they're not going to you don't know what their exit strategy is. You don't know what's the whole nuance of what they're trying to pull off. And so you're not going to be able to make the same decisions once inside the trade that are going to work for them. So I think that's an important one. I'm going to make that a lesson of the day to talk about ways that you can get around that. And that's one of the best aspects of this show. Like, I can't tell you how many times, the midday will be on and Joe is going over an option strategy or a play that he's made. I'll just kind of stop and listen in because I don't know what the heck I'm doing with regards to that. And 100%. I'll get to learn something. And I think that's, or like, there'll be like a small cap play and it's like, oh crap, I haven't looked at this one. Okay, I need to hear, well, Sharif's been watching the stock and has been reading the tape of it, whereas I haven't. If you haven't been reading the tape of a stock and have missed out on the move, sometimes it can be valuable to get the perspective of, okay, well, he's been watching it, he has an idea how it's behaving. I'm just going to listen for a little bit and maybe I can get some tidbits on why or how I can trade it going into the future. That's vastly different from I'm just going to punch long because Sharif punched long, but I am going to get a sense of how it's traded because I know he's been watching it and I haven't been watching it. So there's some nuance to how you can get past that whole FOMO and getting the external pressure on you for your trades.
Well, let's bring in Adara here because Adara watched all of us who all have fundamentally different ways of trading, and she came up with her own unique way to trade. Adara, give us insights on exactly how your thought process was going.
Yeah, thank you very much for bringing me in here. Also, really quickly, guys, I was trying to get the imbalances. I haven't seen anything on that yet. Also, Bristol-Myers Squibb got a little bit of a catalyst here. Apparently, they filed a lawsuit on Tuesday against the HRSA, or the Health Resources and Services Administration. That's just being reported now, so be aware of BMY. But yeah, in terms of, I think one thing that was really valuable, and I want to give you credit for this, Sharif, is you had said to me, like, figure out what your personality is and try to incorporate that in your trading. And so initially, That's why I was drawn to scalping, because I was like, oh, I'm not really impatient in short term. This makes sense. But then I realized another thing that I would say is like pretty key to my personality is I do like things to be a little bit methodical. I like finding patterns. And then that's how I found, the human algo side of things, for lack of a better term. Shout out there to Sharif again here. But that, I think, was huge for me, just figuring out like how my brain works and finding a trading strategy that works for that. And I think one thing too that I want to say on that is it's huge. You realize that, Neil was mentioning this earlier too, you can look at the same thing as other people trade it fundamentally differently. That's the case with all the guys on the floor. And I remember one time, Sharif, you and I in the midday, you and I, Sean, all had the exact same exit price from that down to the cent, but we all had vastly different strategies and ways that we were trading it, right? So I think that's one thing that's really key too. Everyone has their own view of the market. No two snowflakes are exactly in a light shadow to SNOW, and no two traders are going to be like either, but you can learn a lot from everybody that you sit next to. So absorb all that knowledge. The chat here is a huge glut of knowledge, different traders, different styles. So learn from everyone, I guess, would be my thing. And that's how it came to my style.
What a day to make all-time highs on Apple, baby.
Yeah, let's go, man.
It's going, guys. It's still going.
Moving.
$0.75 just got taken out, Joseph.
Let's go. Yes.
I want to cover one quick stock was being asked here by Charmaine Khan, asking about Zscaler. I know we don't have that much time. Zscaler, look, it's a fantastic sector. Cybersecurity, let's call a spade a spade. It's going to be important for a long time. Zscaler, though, it's not a bad company, but it's not best in class. We're talking about CrowdStrike. We're talking about Palo Alto Networks that are technically best in class. Zscaler is respectable, though. And with respect to the chart, it's not at that 260 all-time highs that we put in back earlier in the beginning of the year. I believe we got there in mid-February. We're still in this kind of consolidative, it looks like to be an accumulation zone, quite frankly, with about $160 as that level of support and about $200, guys, as resistance. It looks like it's putting in some higher lows. It looks like, I think that they are reporting. Let me just double check quick when they are dropping that report. It should be soon, if not already. They report December 2nd. So that report comes in early next week. So look out for it. Zscaler, respectable company. Chart looks like it's accumulating, but definitely it's not the best in class, from my understanding. That is for CrowdStrike and the other one.
All right, 5 minutes to go here, guys. We'll get the market wrapped up for a Black Friday. Harry Liu had an interesting question. Shout out to you, Harry. What is everyone's opinion about the impending 24-hour trading? Will it add or reduce the amount of volatility in the overall market? Are you referring, Harry, to the regular session hours, or are you referring to the 24 hours, the 4 p.m. to say 4 a.m. time period? I think as a general answer for the regular session hours, nothing would change. I think the more trading opportunities that traders have, the more trading opportunities that any market participant has, is just going to add more opportunities in general, which will be a positive. So, I mean, I don't know what you guys think, but I don't think volatility would change at all.
Well, I think that, yeah, like if you're just talking about the expansion of getting more opportunities in more markets like Blue Ocean and what OTC is going to be adding to be able to trade aftermarket, that doesn't change anything. If you do change to the all markets 24 hours, the regular session is 24 hours. The challenge that presents for a trader is you're going to have to be you already have to be good at compartmentalizing and developing specific strategies, specific setups. You're going to have to be so much better at that if you're trading 24-hour markets. And the example I will use is anybody I know that's ever been a successful Forex trader. Like the ability to only strike when the opportunity is there. Like you can get away with it as a day trader because a lot of times if it's at the open, like, yeah, there's enough happening, you can get away with a little over trading here or there. When it goes to 24 hours and it's like a Forex or like a BTC or like a crypto, you're not going to be able to get away with that. You're really going to have to be even more specific. So the level of discipline required is going to be 10x if they ever go to that. Which, I mean, if they did, you're talking about a lot of time from now. But there's a lot happening. I know everyone's looking at the markets closing in just a couple of minutes.
Tesla's really going here, Neil.
Wow, sorry, 345. I'm like choking even looking at this thing. Tesla is rocketing into the close here.
And to build on your point, Neil, I mean, like, if you've got some of the regular brokerages that we have in Canada, I'm sure that's available in the United States as well. You've already got Blue Ocean. So if you have that itch, you can already get on to the 24-hour trading. Look, the spreads are not going to be ideal. The prices are not typically the best. In addition, the commissions are a smidge higher, so you're going to have to ante up a little bit more. But we're really not talking about day trade. And personally, I don't know how you guys feel. I'd like to have that 24-hour option for, for that very rare occasion where something is macro, war, God forbid, or anything like that, that presents me with a good trading opportunity and I want to weasel in. I've got the option, but am I going to do it every day? Am I going to be up at 1 a.m. No. I personally don't want
that itch, man.
Yeah, I know.
I'm going to tell you something you don't know about me, Joe Rogan. I like stocks.
Tyrone
That was
Biggums,
great,
man.
Neil.
Tyrone Biggums.
Yeah, so that's kind of how I feel about that.
Legend.
Yeah. No, I agree with what everybody else has to say, really. I don't know how much of an effect. I don't think the Wall Street boys are going to be up too early in the morning. I don't think either trading at 1 a.m. So I don't think that'll change kind of the opening auctions as drastically as some people think it will. But you never know. Again, it would be leaning more towards that Forex style trading where you have the individual sessions. But again, I don't think that will have too much of a drastic effect on our markets.
Who's ringing the bell? Are you ringing the bell or what?
Yeah, market's about to close here, guys. We got a few seconds to go.
I'll get ready for the metaphorical bell ring. I'm okay with that. I'm watching the clock for sure.
You see the volume on Tesla? That's crazy.
That was a huge
crazy volume across the board, even the market itself. Lots of 10 seconds here, guys, if anyone's wondering. So a couple people just putting in the chat here is market open regular. The market is closing right exactly now. So sorry if you missed that, but that's it. That's all. Game over.
Wow.
It is all over.
That's all, folks. No, it's and this is a lot of fun, man. I just want to thank everybody for coming on in. On a half day, like we weren't able to be in the office, which is tough for us. This is the first time that the market has been open and we haven't been, like if I'm taking a day off, it's one thing, but like to not take a day off and not be on the trading floor, this is the first time I can't even think about when the last time it was. And thank you everybody for tuning in. It was a heck of a lot of fun.
For sure. I just want to say real quick, guys, thanks to Randy for hanging out. Sean had to run earlier,
anytime, guys.
He was here as well. So thank you all for hanging out this afternoon. Hope you all had a great Thanksgiving. Hope you all have an absolutely fantastic Black Friday afternoon. We will, fingers crossed, be back to normal on Monday morning. Big shout out to the team at the office. I mean, there's going to be a ton of work, if you saw those pictures that we put up earlier, that has to happen between now and Monday morning for everything to be back to normal. So shout out to Randy, shout out to Rob, Mark, Juan, everybody. I'm sure I'm missing a few, but thank you guys for helping out.
Gonna be fun.
All right, guys, we'll wrap it up at that. If we didn't get to your questions, apologies, but I think it went pretty well. Hope you enjoy your weekend.
All right, take care, everyone.
All right, ciao. Bye, everybody.
Thank you guys for being here. Take care.
Thank you. See you, Neil.